very respected speakers of this evening, Honorable Central Council Member of ICAI and a dynamic Central Council Member, very supportive person for the SIRC initiatives, CA Prasanna Kumar, CA Ganesh Balakrishnan, Secretary of SIRC Panaraj, senior members, friends, very good evening to all of you. Dear members, ICAI is requesting to organize at least one program per month for code of ethics and a disciplinary mechanism. You must understand the importance of the topic. Hence, I am requesting every one of you that we should give importance to attend all the programs relating to ethics, which is as good as technical topic. When we discharge our duties, we have to follow the code of ethics. Otherwise, we will end up disciplinary proceedings. Hence, today we have both the subjects for discussion. Our Central Council Member, CA Prasanna Kumar sir, will present the practical case laws for the disciplinary mechanism. I am sure the exposure that the participants will get on the subject of presentation by the speakers of eminence and their expertise will broadly update our understanding on the new code of ethics and the disciplinary mechanism with the practical case laws. In this good occasion, I request the members to continue to support all the initiatives of SIRC as before and make this year a year of enlightenment of knowledge and value addition. On behalf of SIRC of ICAI, I welcome the great speakers of this evening and express my sincere thanks to our learned resource person, CA Prasanna Kumar sir, Central Council Member of ICAI, and CA Ganesh Balakrishnan for accepting our request and share their wisdom and amongst our elite professional gathering. I also welcome each one of the members who are all participating in this evening program, and I deem it my present duty to offer my hearty thanks to the members who support by their participation to our programs has been instilling confidence. Today we have with us for the first technical session the excellent speaker CA Ganesh Balakrishnan. He is the fellow member of the Institute of Chartered Accountants of India and a cost accountant. He has over 26 years of post-qualification experience. He is also a certified public accountant from the American Institute of CPS. He is a partner in the audit and assurance practice with 26 years of experience, and he is the office managing partner of Hyderabad and Vijayawada office for one of the big four audit firm in entire India. He is the part of IFRS faculty with the Institute of Chartered Accountants of India. He was co-opted member of many committees of ICAI. He is associated with the Quality Review Board and the Peer Review Board set up by ICAI, the Indian accounting regulator, and technical reviews of accounting firms. He is on the regular faculty of Board of Studies for ICAI in imparting web-based lecture for the students. He has presented papers in various forums in India and internationally at universities and other professional bodies on various subjects. With this brief introduction, I will request CA Ganesh Balakrishnan sir to present the papers for the benefit of the viewers.
Thank you very much, sir. I hope my screen is visible.
Yes, yes, sir. Yes, sir.
Okay. Thank you very much, respected Central Council member, Chairman of SIRC, Secretary of SIRC. Thank you so much. It's my privilege, and first of all, I trust everybody is doing well and safe. And I think this is a pandemic which everyone is following, and there's a separate what you call as a code or a lockdown code for each one of us to stay indoors. And as much as the COVID or the corona has got ego, so is if we don't step out, probably we can save ourselves. And I think first and foremost is save yourself as a part of the whole process to make sure this COVID comes down. And I think it's really has impacted, the second wave has impacted, and not only I would say the people at large, but also our own professional colleagues. And I think it's important that each one of us are doing well. Take care of yourself. It's a very important topic today, and especially on the new code of ethics. There has been sessions and seminars which has been going on for the past 1 year, but no matter how many times you go through this, There is always a learning which keeps coming up. I also thought that I would cover some part of the changes for the auditors to consider, but having our senior Central Council member, Mr. Prasanna, I thought it's very important to take his time to go through those disciplinary cases, understand their nuances, and also to make sure that how do we respond to it. One of the things which we as professionals need to be aware of is, given this pandemic will come, pandemic will go through it, but all the audit reports that we sign, all the financial statements that we are associated, anything that we do with the past 2 years will come back to us in some form or the other when any of the regulators or even within our own ICAI would come up for a peer review or a QRB or an FRRB review. So it's important that whether it is COVID environment or non-COVID environment, we need to comply with the rules and regulations as issued by our institute. And towards this aspect of it is the new code of ethics, which is very, very important, which became effective from July 1st. In today's discussion that I will be doing in next 1 hour and 45 minutes, I'll be touching upon the key elements, and I will leave some of those relating to the disciplinary matters and the misconduct part to Mr. Prasanna to deliberate more, and he would do it for about 40-45 minutes, followed by Q&A sessions. Notwithstanding that, you could still put in your questions and answers in the chat box, and that will be accumulated at the end. We will take our time to respond to it. But one of the things that we need to be cognizant about, any changes that we are bringing in India is also an impact arising out of the changes that is happening across the world. World is completely changing, whether it is the accounting standards, whether it is the profession itself, whether it is the policies that are undergoing change. If you see various aspects that have been issued either by the ISB or the AASB, all of them have been issuing changes because of the complexities that they are seeing, the manner in which either because of the failure of the system from an auditor side, or because of the complexity of the business, that there is more and more clarification required, or in terms of detailed guidance required. I will touch upon this, and this is actually evolved from 1960s onwards. And just imagine, from 1960 to about 2020, there's only 12 times that actually the revision has happened. But what is assumed importance is in the very recent past, when there are a lot of frauds that are happening, a lot of business failures happening, because of which it's resulting into loss of value or the loss of business to various people. So this is one thing which really attracted, and what was needed is, as much as the businesses needs to follow ethics, it is also we as professionals, or whatever the ethics that has been devised by the institute, we need to comply with it. And that is a very key aspect of it, and which I'll talk about. I will talk about the changes that has happened between the code of the old code and the new code. I'll also touch upon the volumes of the code of ethics is now into 3 volumes. I'll touch upon each of the volumes that has come through it. And also on the action on disciplinary, I'll just touch upon, whereas I will ask Prasanna Kumar to just go through in respect of it. When we talk or deal with ethics, and let me tell you one thing, there is nothing which is written. There is nothing called right or wrong. It is actually a moral principle, which I would say. It is about a behavior. It's about a standard that is expected of a professional. Because when we talk about we are partners in nation building, there is some trust that is expected from us. There is some credibility that is attached to our profession. And that is what the public interest is all about. The public believes that we will follow and comply with all the ethical requirements issued by the institute. Not only by that, not only in letter, but also in spirit. And I think that is what is very, very critical. You cannot teach anybody about ethics. Ethics cannot be taught in a class. Ethics cannot be taught in these type of seminars. Ethics is a principles which is followed by each individual. And I think that is what is very, very important. No matter what we talk about ethics and professional ethics, there are certain elements which relates to a human, and the human, the way he responds to it. The professional accountant, which is a new definition that has been given instead of chartered accountant, the professional accountant How does he behave in a circumstances is what will derive the behavior, and what will derive the ethical principles, whether it's compliant with it. And I think that is what is very, very important. What is expected is a standard of behavior. A standard of behavior is something where nothing can go wrong, everything would be right. And I think that is very, very important aspect of it. Why is ethics important? Somebody might say, am I ethically right as a businessman to charge more when people are suffering during this pandemic? The businessman says, I have lost this for 10, 12 months. Now this is an opportunity where I can make money for the losses that I've created. Somebody might say from another perspective, from a public perspective, would say, hey, this hospital, this oxygen guy who's holding the oxygen, or these oximeters, or these medicines, they are overcharging, they are actually looting public. The perspective from a public is that the moral principles of a business is not met. From a businessman perspective, he says, I'm under loss, I have to comply with it. I'm morally right to maintain this. There is a very thin line of difference. And I think what is important for each one of us is, how do we bring back that confidence, that respect, which the public is looking at it? Because we are at service. When we are at service, it is the manner in which we deliver is what matters. In the manner in which we behave in all circumstances, good, bad times, whatever times, is what determines it. And I think that is what is very, very essential. Ethics for doctors, ethics for CA professionals, ethics for anyone is the same. There's no change, circumstances do not change. But for all chartered accountants in India, practicing in India or in service, the conduct of members is governed under the Chartered Accountants Act. What's the code? Again, code is something called a dictionary, a Bible, or a rule that is given for somebody to comply with it. It's a set of professional principles, standards regulating a relationship. What is a relationship a chartered accountant has got? He either has a relationship with his client, he has a relationship with the employer or an employee or a fellow members or the general public. So there is a code that has to be prescribed, a code which helps the chartered accountants to identify themselves to be of a higher standard. So I think that is what a code would determine about it. Now, the Institute has been a forerunner in these type of compliance, in formulating compliances, whether it is a contemporary professional standards. Because why this is required? Because it is gone are the days where the businesses have become dynamic. The Institute cannot hold back that you will take something which is followed elsewhere to then make it into a new standard in India. The Institute has been forthcoming, has been the forerunner. When I talk about it, if you see any changes that is happening outside of India is similarly happening in India. So this is the extent of the changes that have been brought in, and I think that is very, 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 very important. We have to be dynamic. We need to comply and cater to the changing times, and I think it's a very, very important aspect of it. Now, if you were to see the Code of Ethics, the first time that got introduced in 1963, but if you see the number of times it has undergone revision, if you're taking into consideration the ICAI rules which came up in 2005, if you were to see the number of times, it approximately 12 times it has gone through. It is now, it is post the Companies Act 2013, where the ethics have really assumed importance. Post the formation of various regulatory bodies, including NEFRA, including QRB, it's where, or the MCA come looking at it, or the GST Council looking at some of the things. That's where it got evolved, and I think that becomes very, very essential for us. Now, if you look at the Code of Ethics that got introduced in 2009, that was the 11th edition. The 12th edition is in 2020. In the 11th edition, basically the eyes by the International Ethical Standards Board of Accountancy, which actually formed in 2005, which brought in a lot of provisionings, which made sure that every professional accountant or a chartered accountant complied to it. But in India, we have not only the professional standards that needs to be followed, which is prescribed by the Institute, we also have what are called the provisions of various Indian laws that one needs to comply with it. apart from the normal CA Act regulations, councils, everything, all of that, we have got other regulations to be compliant with it. So the International Ethics Standards Board of Accountants did publish a detailed guidances, and so was in 2018, which that's how the 2020 got evolved. Now, why did this revision require? And the revision was required because there were a lot of changes that happened in CA Act, CA regulations, modification in brought in during the council guidelines, clarifications. There were a lot of revisions that came up because of the Auditing Standard, Accounting Standards, Companies Act. All of these really brought in. But couple of things which I thought we should have stood the test of scrutiny was not having an exclusion. Unfortunately, the new code, which significantly brings about a larger document of imposing new restrictions, somehow gave up on certain aspect relating to non-compliance to laws and regulations, non-compliance to the tax, permitting tax or taxation service to audit clients. I think somewhere we should have actually, COVID or no COVID, it doesn't make any difference. We should not have excluded, and I think this is where sometimes I feel that our restrictions of a code of ethics should not be restricted only to audit engagements, should not be only restricted to statutory audit or internal audit, or for that matter, any of the assurance engagements. It should be comprehensive. When we talk about a professional accountant, if I'm a professional who's rendering a taxation services, how is that I cannot comply? I don't have to comply with the code of ethics. And I think this is something which still, is the gray area, which I think the institute will come back in respect of this particular aspect of it, of rendering taxation service to your audit. That means one way there is a complaint saying that this audit firm is providing audit services plus it's providing tax services, it conflicts interest. But the other way around, the institute says this code of ethics is not applicable. I think this is where we need to start re-looking at it and say, listen, if it is an audit firm, let it be only an audit firm. It cannot provide any other services. So is the case of non-compliance laws and regulations. How can we say that if I'm associated, and let's say if I'm auditing a company and which does not have permission to run a factory, and they don't have a factory license, they don't have an license to even, they don't have not registered anything, they have do not follow the safety norms. And in our auditor's report, we say the company has complied with all regulatory matters. Now look at this irony of it. One way the code of ethics does not talk about compliances relating to this, does not make it mandatory. The other way, we make a statement saying that in respect of other report and laws and regulatory requirement, the company is in compliance. I think this is where even this element of the gray area has to be removed. I think all of these are threat to independence. And a threat of independence is, again, when we talk about threat of independence, it is a manner in which a professional accountant renders services to any organizations. So there should not be any conflicts, there should not be any interest. And all of these is what the code of ethics really demonstrates and talks about. The applicability of the code of ethics of 2019 became effective from July 1st, 2020. In the council meeting in June 30th, between June 30th and July 1st, these three were deferred: responding to non-compliances, fees to relative size. I think, we have to move to a fee size which is, which is commensurative to the risk the professional accountants are taking. We cannot be charging a fee which is lower. It is not a business. Professional services is not a business. We say time and again. But why is that when we do what is called quote to a client, we can quote and undercut a fees, and which is not, a fees is not mandatory. I think this is something which I believe personally, this is again my personal view, where we need to bring in, because if every public expects us to render a professional services, why should we not be paid for? And why should the institute not bring this where then this is the minimum charge that you should charge? And then what happens is the cost of running. Now today, if you say, if I'm working from home, and if you're all listening from home, the cost of technology is so high. We are not reimbursed for this. but the technology that we have to invest, I cannot have physical document. I need to store in cloud. So all of these becomes very, very critical. So these three have been excluded, especially on non-compliance laws and regulations, the fees to relative size, which I'll talk about, this taxation service to audit clients. What are the key changes that has been introduced? Again, this key changes has also brought in the concept of professional accountant practice, the professional accountant service. And I think this is where it is important. Earlier, if you're a chartered accountant, if you go and now there is another issue which is really hurting the whole of the CA profession. One of the aspects is, suppose if I'm a member, if I'm a chartered accountant and pass the chartered accountancy course and apply for a job and I get a job, but the person who is in service does not take a membership for a membership. Now this is where the institute has brought in back that every member should have that membership, and that is a very good step which the institute has taken. I think if you claim that you are a chartered accountant and based on which you get a job or in a service industry, why should you not comply to it? Equally, as a professional accountant, a chartered accountant in practice is complying with it, why should a chartered accountant in service should not comply? And I think that is what this ethics will bring about, where there are certain rules and regulations similar to those in practice, not comprehensively, should comply to it. So the important changes that we will talk about today is on non-compliance of laws and regulations. I'll touch upon some of the changes that have been brought in. This fee from a single client should not exceed 15% of the total fee for 2 years. And I think this is where I'm trying to bring in. Suppose you're practicing in a Mofussil area, you're practicing in a smaller area. There are very few clients who come to you, and you will get maximum fees from that. It's only in the situations wherein that you give an opportunity for a fair play. When I say fair play, a fair play is where you are actually being paid for the time and the experience that you're spending on the job. I think that is what will be a game changer. Rightly so, right? At this point in time, this 15% of total fee has been been deferred, rightly so, but we need to still address. You may probably need to make a distinction between those people who earn a particular fee similar to one in cities, larger cities, and a smaller towns, and then bring about. At this point in time, the fees is limited to about less than 5 lakhs, but I think there is one more improvement that can be done in respect of this. The other aspect of it is in respect of restrictions on providing taxation and management services. I think, if we have to enhance the credibility of an audit firm, this is something has to be made mandatory. And I'm in for it, because you cannot be seen, and whether it's public or non-public, whoever it is, it cannot be seen where they would come back and say, hey, listen, he is not making money in audit, but he's making money in taxation or management services. Why should it be? Because if you are rendering a service for an audit of a client, the whole objective of an audit, the quality can get, the conflict of interest can compromise on quality. And I think this is something which I expect some clarification to come through it. The earlier independence rules was applicable only for the audit clients. Now it is applicable for review as well as for the other assurance engagement. I think rightly so, because you cannot be saying only for audit, for other engagements I will not have, like for certifications or for any of the financial statements that you issue it for any of the projected or restated for any purposes. Another concept that got introduced is a very important concept, is an unintentional breach of independence standards. And I think this was never done before. That means if I give, these are the rules in which you have to follow. And for instance, that let's say you have been the internal auditor or you're doing the accounting services. Suddenly during the period you've been appointed as an auditor, or your network of firms have been doing. So you have network of firms in city A, city B, city C, city D. The city B, which is a network of firms, is doing an internal audit, and you are doing a statutory. Somebody is doing a management services. Now, this is an unintentional breach, probably because you do not have a system to capture all of the independence. This is something which you need to start looking at it. There is increased clarity in terms of responsibility for compliance for firms and networks of firms, and I think one of the good steps, which is being projected by the institute is, to bring in a lot of the Indian firms in the form of network. And I think that rightly so. We need to have a lot of big Indian firms. We used to take pride of Indian firms prior to 1990s. We should get back to that concept of the Indian big firms. The use of professional accountant, again, all chartered accountants, everything is being now replaced under the code of ethics as professional accountants. You will be hearing the professional accountants, you will be hearing the concept of fundamental principles as we talk about. If you see the changes between the 11th change, which happened in 2009, and the 12th changes, which happened in 2019, one of the aspects was on responding to non-compliance to this one. It's deferred, but this was not there in 2009, introduced in 2019. Restrictions on taxation service to audit clients was deferred at this point in time, but there was no provision in 2009. But there are certain aspects of it which has been included. That means tax return preparation is not considered to be a threat, but tax calculation is supposed to be considered as a threat. And I think it's a very thin line of difference, but nevertheless, you need to look at it. Tax planning and assistance in resolving dispute relates to some self-review threat. So something like that, you need to look at it. So this is a very fine, thin line of difference. Many of the professional firms do it, help the client to make sure the tax calculation, the changes that are coming through. Provision for management responsibility to the audit clients. Again, this is, you have to see management responsibility, because if you see many of the clients, whether it in Mufasal areas or local towns or small cities, districts, and all of that, there is no knowledge about accounting. There is no knowledge about maintaining books of accounts. Many of the chartered accountants maintain books of accounts and also issue it. Now, this is a responsibility which we should not take if you are an auditor. If you are a tax auditor, if you are a statutory auditor, we should not be preparing books and we should not be assuming the responsibility. And I think this is a big change that every professional person in practice should look at it. The restriction on fees from an audit client, again, 40% restriction from a single, this is again deferred to 15% 2 consecutive years. Earlier it was 40%, now it's moved to 15%, but this is again deferred. Duty of an accountant in case of unintentional breach of independent standards, this was no provision, but this provision has been introduced in Part 4 and Part 4B. Independence requirements, states independence for assurance engagements. Now it's a comprehensive for audit, review, and other assurance engagement. Now, if you were to look at it, if you look at SQC1, the Standards on Quality Control 1, many of the concepts, if you look at in the ethics, is actually come up from there also, or there will be a duplication in terms of understanding. Both of these are works parallelly and have to be complied with each of the member firms or professional firms. Independent standards, there was no characterizations, whereas here you have now brought in as the international independent standards that have been brought in. Again, all of these information has come from ISBA, so this is something we need to look at it. Changes in advertisement guidelines and specific council guidelines, you would see a lot of chartered accountants are these days coming in debates. You would see a lot of things are coming up in movies. All of these, earlier there was no specific codes. Now there are specific codes, member firms. Firm names are to some extent it is allowed, but it cannot be differently from other persons. Interviews, you should only state factuals. Now again, there is a very thin line of difference, but this is something which a modification has come through. Now, the definition of a key audit partner, and I think why this is important, because if you look at SQC1, there is a definition of an engagement partner. There is no definition of a key audit partner. And why has this come through it? Many of the firms, what they used to do it is after, let's say, a period of 7 years, the senior partner is to rotate off and another partner is to come and do it. But the senior partner still continues to engage with the client, still takes decisions, still gets involved. It does not only apply signature on any or print any signature on these financial statements, but is involved in this process. Now, the definition of a key audit partner and the cooling period, that means if you have served on a particular client for a period of 7 years, you cannot be involved in the client for the next 5 years. Earlier it was 2 years, now it is enhanced. Engagement partners was 2 years, now it's got enhanced to 5 years. That means the familiarity threat, the self-interest threat, all those threats, I'll touch upon it. But look at this. If there is a senior partner with whom the relationship has come through, he cannot be an auditor after 7. He cannot sign any financial statement after 7 years. Now with this new code, he cannot be associated even with that client. And that is what becomes very, very important. So the definition of a key partner includes engagement partner, into the individual person responsible for engagement quality control review, other audit partners on the engagement who make key decisions or judgments or significant matter. Depending upon circumstance, role of the individuals in the audit, other audit partners might include. It can include partners of division, significant subsidiaries or division, which was not there before. Now this code of ethics has brought in, the 2019 code has brought. There was no definition of public interest entity under the Ethics Code of Ethics 2009. It has been defined under 2019. Includes a listed company, includes any entity which is defined by the regulation or as a public interest entity. It includes banks, insurance companies, all of them as a part of public interest entity. And I think this is where it assumes importance. ISBA use the term professional accountant. Similarly, somebody asked, earlier we used to use auditor's report. Suddenly auditor's report become independent auditor's report, and everybody asked, what do you mean by independent auditor's report? If you relate this to the code of ethics, and where the emphasis is on independence, why should it not be an independent auditor report? Because he is independent of everybody. He does not have any association. It is not, his relationship is only in respect of an audit that is carrying out. He doesn't have any other services. He complies to all ethical, professional, independent standards. And therefore, the report that he issues is an independent auditor's report. Now, the use of professional accountant, you will see PAs, which you will talk about, but the professional chartered accountants, it means nothing but an individual who is a member of Chartered Accountants of India. So professional accountant defined under the Code of Ethics is nothing but a chartered accountant as defined by the ICAI. And it will include the people in service. And I think this is what is very, very critical. It is not only this Code of Ethics is applicable to the person who's in practice, the professional accountant practice, but this is also applicable for those people who are in service, and I'll touch upon the Code of Ethics. So if you look at the composition of the Code of Ethics and the Volume 3 disciplinary cases decided so far, all of that, I will leave it to Mr. Prasanna. He will take you through the entire processes, mechanisms, how it is being done, what is it, what are the emerging issues that are coming through, what needs to be taken care by the professional members, what are the cases that he's hearing, how is he addressing all of them. I think it's a very good apt way to look at from a practical perspective. But from a theoretical perspective, you should also know what are the principles we need to comply with. So earlier you had Part A, Part B, which was included as a part of the 2005 or in the 2009 code. Now in the 2019 code, it is taken to Volume 1, Volume 2, and Volume 3. Again, this is again based on the ISBA's 2018 code. So let's look at what are the key aspects that are covered in Volume 1. Again, this Volume 1, you again divided into 3 parts. Part 1 talks about the complying with the code, fundamental principle, and conceptual framework, similar to any prefaces that you have, any introduction chapter, any sections in enabling sections to help you understand. Part 2 talks about professional accountants in service. Part 3 talks about professional accountants in public practices. And Part 4A, 4B talks about independence, rules for audits and reviews, and for other assurance engagements. Again, it is divided between various sections. So if you look at Part 1 volume, basically deals with sections 100 to 199. I'll take some of these sections 200. I'll take some of the sections relating to 360 and 560 of NOCLA. I'll talk about public in practice. But in the first section between 100 to 199, talks about the compliance to the code. Every professional accountant should comply to the code, should comply to the fundamental principles. You will find a lot of FVs which are being used and the conceptual framework. And again, all of these comes through from where? It comes from basically the SQC document on ethics, the integrity, the objectivity, the professional competence and care, confidentiality, professional behavior. This is again, if you're good in SQC, and I think all of these would get married into this code of ethics. There are specific sections, section 110, 11, 12, 14, 15, 13, 14, 15. Again, when we talk about integrity, there are various examples that we talk about being straightforward, being honest, and all of that. End of the day, it is all about your behavior. I would actually attribute a professional behavior. A professional behavior will include all of these: the integrity, objectivity, competence, due care, confidentiality, and all of this. And I think that is basically what we want to do. We want to do everything right at the first time. If you comply with the doing right for the first time, there is no second time we talk about it. So if we believe that if a professional accountant believes there is a breach of any code and it takes corrective action, that itself demonstrates that is a compliance to all of these principles of integrity, objective, professional competence, confidential behavior. Now, the conceptual framework also brings in, and section 120 talks about under which circumstances a PA might operate, will get to know the threat of compliance of the fundamental principles. Again, if the behavior, if your thought process of any or professional accountant is to see how do I map whether I had an association with a client, whether I have a business relationship with a client. Somebody might ask a particular question. Somebody might come back and say, hey, listen, I want to have, I'm actually having a commercial transaction, for example, and I've taken a loan from a bank. Does that conflict my independence as an auditor? Probably yes and no. There is a limit that you need to look at it. Or there is some commercial transaction happened with a relative of yours. Does it conflict my this thing? Or an employment? So all of these becomes a threat to compliance. And I think, how do you do it? Only when you have an attitude to address these issues. If I don't have an attitude, I said, fine, these compliance, just fill up the checklist and give it because you have a peer review or a QA review or some review comes up, just fill up this checklist and we are done with it. No. If the manner in which I respond to a non-compliance and the manner in which I follow up process to remediate the non-compliance is what will determine whether I've complied to all of this, whether there is a threat to any non-compliance has been approached. So it's very, very important for each of the professional accountant in practice or in service to use the compliances matrices as a behavior which will address that if there are any threats, manner in which what are the mitigating factors that have been used. And I think when you apply the conceptual framework, there is an element of professional judgment. There are certain information that comes new to you. You may not be aware of it. And there is also a test that you should know. If suppose somebody were to come and verify all of this, would I stand the test of a third party? Will I stand a test of scrutiny? I think that is what would approach and determine the behavior. And these are quite common. The threats and safeguards threats are quite common. The self-interest threat, because let me tell you, to get a business is difficult. To maintain a client is difficult, right? Or I might say, okay, fine, I might have actually been associated with the client for so many years, I could have a financial interest. So there is an opportunity of a self-interest threat that which can influence the behavior of a professional accountant. Or sometimes you have a self-review threat itself. You say, this company cannot go wrong. This managing director cannot commit fraud. This CFO is very honest. This company I know will make profits, even though they're on losses, no impairment, you know it's profit. So this threat of your judgment that you've made based on your previous experiences could also be a big challenge. And that is the reason why when you have this engagement partner, audit partner being looked at differently, the key audit partner which has been brought in, which has to rotate off and have a cooling period of 5 years. That's only to remove all of these threats that have been imposed on us so far by our own behavior, by our own practices. Advocacy threat. You may want to promote a client. You might say, hey, you're doing a working the audit or doing an audit of a real estate. You might say, hey, listen, my client is coming up with some real estate properties. Why don't you buy this? Why don't you look at? Or the client might come back and say, hey, listen, in other clients you could use percentage completion method, or you can get a certification saying that he is confirmed to you and therefore you can account as a revenue. So to the extent of how do you promote your client, the position of the client, and generally it happens in a discussion where the client wants a position which is favorable to them, and which you want to advocate it. So you have an advocacy threat. You have a familiarity threat, and the familiarity threat is the number of years of association with them. You're always sympathetic. He says, they had bad days, COVID period, bad days, no impairment required. Let's look at it. They've been doing very well. They're paying fees very well, very, very good. But you also have an intimidation threat. That means you have certain clients who are very aggressive. They'll say, I will only talk to the partner. They'll say, I want these accounts by this date. Look at all of these. And I think these are no different from an XQC standard that we talk about: leadership, ethics, monitoring, engagement, performance, engagement, continuous, human resources, training on. All of that are covered as a part of it. And this is no different from that. So when you evaluate threats, right, you should evaluate threat, which is what is called an acceptable level. You cannot be emotionally attached. You should be unemotionally be attached to these parts. If you're emotionally attached to taking a decision, it's a very, very, it should not be opinionated. You should not have a decision which should be taken during on the flip of a decision which is with less time in a situation which is not appropriate. It is important that if you believe that as a professional services firm, you believe that a particular client is not complying to your own ethical behavior or your ethical systems, I think that is something which the facts and information should be gathered before it is too late. In today's changes to technology, and I don't know how many people are following this technology changing which has come up. The recent technology was they've mapped the savings account to the form, and suddenly in the month of March it flooded with so many complaints to all saying that high value transaction not captured as a part of your income tax return. Look at these aspects of it. With technology changing, with new information coming, and the new tax form is undergoing change in June, so much of information, and with the fast tag getting, I understand the fast tag will be now any goods that passes through will be linked to the GST. Just look at all of these. When information is changing, should you also not look at, when you're advising a client, when you're looking at how could it impact? The biggest change that is coming through from this year is the changes in Schedule 3. And why I'm saying that is important is, it is as good as giving detailed schedules, what is prepared and given to you as form of work paper as a part of your balance sheet. To that extent, they've gone to it. So when the information sought by the regulator and public at large is enhancing, should you not, as a professional account, look at this much more closer, determine the information and see whether there is a threat of influence? Take for instance, you might have a situation wherein there is a company which is wanted to enter into an agreement so that they can enhance and produce certain products of a party which was supplied the machinery. Now the party, what they do is they take the asset on their name, but they lease it to a company B. So there is a transaction between company A and company B. Company B says that I will give you plant, a particular machinery, use this machinery, and you give me this product. This is what the charge you can get it. After the end of the period, you can take back the assets or you can dispose of the assets. Now, there is no agreement which is entered, let's assume. Agreements are not entered. The party which is supplied to you on lease, because the assets, the bill is on his name, assets are delivered to you. So he will account it as a part of the fixed asset. He'll be claiming depreciation. This company saying that I've used this as asset, I will capitalize this asset. Because this company also has capitalizing the asset, because they're saying this asset will be, after some point in time, I might acquire this. But I've not entered into an agreement. Now look at the irony of it. That part, company B is claiming depreciation. This company A, which is producing, is also claiming depreciation, even though this is the nature of a lease. But because it is not nowhere documented, but somewhere they say in a minuting of a document, they say you can use this asset and take it afterwards. So therefore, from a perspective, you need to look at this information at your client. And I think why I'm saying this is very important is, if something goes wrong, company B, company A, where you are associated, you also put yourself into the same trouble. I think that is what becomes the addressing the threats. If there are circumstances which will threaten your interest, which will threaten a relationship, you need to apply appropriate safeguards. And that appropriate safeguards will come to enhance your professional capability and your expertise. Because that is where threats and safeguards becomes very, very important. What are the key considerations for an audit review, which has been there all while? We always keep talking about independence of professional accountant. We talk about independent standards. We talk about professional skepticism. We talk about compliance with fundamental principles. I don't know how many of us really attach this importance. We always say, my client, I would say, hey, listen, my CFO is my best friend. But if your CFO is your best friend and you are signing a financial statement, how will apply professional skepticism? Because a professional skepticism is something where somebody provides you information, you trust that information provided, but as an auditor, to use a skepticism, you have to verify it, you have to challenge it. And I think this is where we have to start enhancing our skepticism. I'm telling you, it's not worth it. It's not worth, if, given the changes that are coming through. Now, slowly RBI is coming into regulating bank auditors and all of this. As regulators start regulating audit firms, more and more issues come. So there is a recent article yesterday which came back and said State Bank of India has got about 76,000 crores of fraud in it. Just imagine the volume size. And if I'm an auditor associated with it, what is the professional skepticism I'm talking about? And what is that document they're doing when you have frauds in so much extent? Look at that client which has committed fraud on the banks. And if I'm associated with those companies, what is the state of mind when I issued an audit report, which is a clean report? Where is that professional skepticism? With so much of oversight, and I think my emphasis, apart from your independent standards and the professional skepticism, is where we need to look at it. We need to get back to the shoes of an auditor and say, I will verify whatever you provide. We will have to have adequate time. Get a bank auditor audited in last week of March and say, I need this bank audit to be completed within 1 week. How is it possible? It's humanly not possible. In a COVID consideration, how do you comply to it? It's humanly not possible. And therefore, this is where we need to start looking at it from our own perspective is, are we doing the right things? Are we asking the right questions to the clients that we are dealing with? So this is applicable to the professional accountant in service. And this is where I said this becomes critical. It is not only the professional accountants in practice, but it is also applicable to professional accountant in service. And there are particular sections that have been given where these are applicable. There are certain cases where it is applicable to both. Applying the conceptual framework remains consistent. You need to comply with conflict of interest, because conflict of interest is very, very important. You cannot be having a transaction with somebody of a relative. Let's say there is a commercial transaction of, let's say there is a godown where they store your goods, or there is a consignment sales, you actually favor that party. So the conflict of interest has to be looked at it very clearly. And again, I'm bringing back this concept of how do you determine the conflict of interest? Focus should get back to related party. Related party transactions is where the maximum fraud happens. Related party transaction assumes critical when you look at a conflict of interest, and a conflict of interest are at that level where you can take a decision or you can influence on the system. And that it could be an IT head, it could be a CFO, it could be a company secretary, it could be a managing director, it could be a marketing manager, it could be anybody else. But if you are a chartered accountant who's in practice, in service, and if you are running this, this is something which is very, very clear. Not to allow conflict of interest to compromise. To follow relevant reporting framework. And again, as much as, the professionals who are in service in practice gets impacted because of some fraud comes in. The role of a professional accountant service is as equally is responsible. If there are any misleading information, if there are any judgment that they've used, if they've omitted anything intentionally, they have to give that information, because you expect that the financial statement that is presented to any auditor provides you all information that is relevant and that is followed with a particular standard. And this is very, very important. Second thing which is important is give sufficient, you should not mislead anybody. You should not mislead an employer. You cannot say you will get tax exemption of 150% and therefore you claim this, and then come back to auditors. I've already committed that I will get tax benefits. Now you do whatever it is. I have to demonstrate it. Look at this aspect of it. If you need to have sufficient knowledge or expertise before you advise your employer. If you have any financial interest, compensation, incentives. In fact, in the recent terms, about a couple of years ago, SEBI actually penalized a CFO of a listed company for insider trading. Now look at this aspect of it. If you are a CFO of a listed company and you are dealing with shares, because you know the profits, what is happening in, whether it is on your name or through any relative or through any other person, I think this is something which has to be complied with, and it's a very serious aspect. Inducements to gifts and hospitality. Similarly, you cannot be bribing somebody. You can't be giving to a bank and saying that you give me a loan, or you cannot be sending some beautiful gifts to any of the professional accountants in practice and say, hey, listen, I want this adjustment, I want you to sign it off today. I think that is something which you should be avoided. Pressure to breach the fundamental principles. You should not be bogged down by any pressure from others for any breaching of compliances. So next is on NOCLAR, which is your non-compliance with laws and regulations. And non-compliance and regulations, when do you come across this? Typically you come across this when there is a fire accident. You come to know. There is some goods which have been rejected by certain regulators. You come to know. There has been certain banks which have been restricted. You come to know. We have certain accounts which are freezed by regulators. You come to know. Now look at this. One way you need to report on other reporting regulatory requirement in your statutory audit report. But the other way around is also to see under the the auditing standards itself, where we have to report on compliance to laws and regulations. We have to do that extra effort to make sure that this has been done. For instance, you cannot be recording a sale of an asset without being registered. You can't say that I've already entered into agreement for sale and therefore I've taken entire profit into my business. You have not complied to registration, and therefore this becomes very, very critical. If there is, or let's say some client comes back and says, sir, I want you to do adjustments in tax. I don't want to show more inventory. I don't want to show this. I don't want to show provision. You write off more assets. You show more expenses. I don't want to pay profit. I cannot be turning a blind eye for all of this information. Slowly the tax QRB has started issuing guidances. In fact, yesterday there was a webcast for 2 hours on the tax QRB, their observations. Go and look at it as a review as a part, because these are all recorded ones. But look through this. The tax QRB is coming back and say your tax audit report is not in compliance. You have got your, some of the income tax, because it's now getting automated, they come back and says your return of income does not match to this. Your Companies Act comes back and says, hey, listen, if there are any surveys that are done, if there are any undisclosed income, please report. Look at everywhere you have non-compliances. And these non-compliances has to be dealt with. While this has been deferred, my suggestion and encouragement is that you need to comply with this on a regular basis. Again, there are restrictions. Unlike in ISBA, it is applicable to all assignments and all employees. Whereas this is not, it is only applicable to listed companies, applicable only to auditing assignments, only to the employees of listed entities. Now just look at all of these. This should be applicable to everybody. Non-compliance is a non-compliance. Why should you say only listed company, unlisted company are not doing it? It cannot be the case. In one hand, you say the unlisted companies are very small in number, unlisted is larger number. Why should you not expand this to the larger population? And I think that becomes very, very essential. Again, laws and regulations that have a direct effect on the determination of material amounts and disclosure in financial statements. or a non-compliance to business and operations, which results into material penalties. Includes frauds, corruption, bribery, money laundering, financing proceeds of crime, securities markets and trading, etc. You can name it, you will have all of this. But unfortunately, what is not covered here is bribes to government officials, which actually should be covered, because no work happens in this system without a bribe. And there should be a specific column saying that similar to you have this corporate funding, electoral bonds, you should have fraud bonds, or what is called as government services bonds for getting your services done. But it's on a lighter note. But I'm just telling you, because unless we remove those aspects of it, it will not be able to determine it. This nuclear is not applicable if the matters are clearly inconsequential. While these are not mandatory, many of the firms, larger firms, have already adopted this aspect of it. These have to be complied with it on an ongoing basis. Now, let's look at what are applicable in public practice. Now, again, section 332, 362, 300 to 400 talks about it. So they have to, again, even similar to what we talked about in service, the professional accountant should comply with the conceptual framework. They should evaluate and address all the threats for compliance with fundamental principles. Conflict of interest is included. You also, now, if you are a part of the network and you have in the past you have not tested, that means there is a firm in which you are associated, but you are all different Indian firms. Even though you don't get any businesses, even though you don't get any references, but if you're a part of the same network, and if one of the firms, let's say X is doing an internal audit and Y is doing a statutory audit, or within the same group, that will result into a conflict of interest. And this is something which you need to be cognizant of. Comply with the KYC norms of ICAI. This is mandatory from effective July 2017. Communicate with the previous professional accountant, respond to the professional accountant, periodically review whether to continue with the engagement or not. I think this is very, very essential. If you gather facts, now let's assume that suddenly you have a company which is profitable, next year it becomes loss. Suddenly you took a decision, suddenly the company had a particular decision, the judgment estimation changed the moment there was a loss. Similarly, for any of the professional services firm, professional accountant should evaluate whether they should be associated with the engagement or not. And I think this is very, very important. This is one which was used, second opinions. You know, many of the clients used to talk to chartered accountants and say, you know, give a second opinion. No, there is no concept of opinion. You cannot be giving any opinions to any of the accounting, to any of the companies. Now, this is something which is very, very important. You cannot be issuing an opinion, because what happens is you're not complying to the fundamental principles. Suppose if I'm as an auditor take a decision, right? And I know what is the facts and circumstances, I say this is what the accounting. So suddenly some other firm comes back and say, this is what you can do in accounting. And you generally find this. You know, the clients going to other firms and trying to get this. The second opinions is generally considered as a self-threat, and you should avoid it. This is very important. The level of fees, the contingent fees we talk about, basically the percentage when it is available, what is not. Referral fees or concession, again, this referral fees and concession is again based upon only with the who are chartered accountant, members of chartered accounts and all of that, that is allowed. Inducements, gifts and hospitality, various in abroad, in various corporate governance, they follow what is called a rule of giving gifts. Gifts given during the course of Diwali, this thing, festivals, it's all fine, but you cannot have as an auditor get a gift. Let's say you are the auditor of a real estate company and says, sir, out of my love, I'm giving you one gift of your flat to you. You please take it, or a villa to you. That is prohibited. So these are some things which are very, very essential. Any gifts in hospitality, every firm which is in practice should look at, devise, and see what extent. Is it 500 rupees is appropriate? Is it 1,000 rupees appropriate? I cannot have a 10,000 voucher or 50,000 voucher or 1 lakh vouchers. Custody of client assets. This is quite common, but now with this ethics, new code of ethics of 2019, it says holding of client assets creates a self-interest threat, which will change the professional behavior. And I think this is something based upon a lot of these cases which has come through in the discipline, which Mr. Prasanna would talk about, will have these issues. Next is on the independent standards, which is 4A and 4B. Basically, this professional standards is for audit and review engagement and other assurance engagement. The 4A talks about audit and review engagements. Now, again, as I said, professional independence should always be felt. It is very tough. You can't give a declaration saying that I'm independent. I have not dealt with shares, I'm independent, but I have transactions. If I take any demat account, there are a lot of transactions goes through it. This is something which we need to be very, very cognizant if we are in statutory audit. Second thing is the professional accountant shall be independent. Independent means he should comply with all codes, regulations, guidelines is issued by various authorities. He should be in compliance with section 141, applicable for the public interest entities. You have to maintain independence throughout. You cannot say now I'm independent on the date of signature, so therefore I can sign. No, independence throughout the period or throughout the period of the engagement that you have with the client. If there are any issues, you have to communicate with those charged with governance who are nothing but your audit committees, your board of directors and all of that. If there is a breach of independence, there are steps to be taken when you get new information that you sign. The next aspect of it for the professional accountant in practice is that fees should be commensurate to the work and size. And I'm telling you, please get back, earn well. Do not go and undercut fees. It's not worth it. Because whilst there is a very good initiative which the council came back and said, you should have not more than 15% of the total fees from the same client, right? But this has been deferred for consecutive 2 years. But what is important is, if you have, when you have these threats, right? And one of the questions is intimidation threat. If you have more fees coming from one large client, the client would say, because of me, you are surviving. Otherwise, you're not of business. He doesn't know because of your signature, his financial statements are accepted. He always talks the other way. The other aspect which I've noted, many of the professional firms have to comply to it. If there are any overdue fees to be paid to any of the professional accountant, previous auditors, or to your own self without getting fees, please do not sign. And this is a big challenge for many of the young professionals or professionals who do in certain areas where they don't get paid. They get paid only when the next cycle comes. Big issue. Contingent fee, we'll talk about it separately. There is a detailed part of it. Now, the other aspect of it which has been brought in is that no key audit partner should be paid money based on the success of selling of any of the non-assurance services. You cannot have where you say, have you sold this business to this person? Have you got growth to my business? So therefore, this year I will give you 15% because you got 30% to my business increment. I'm giving you 15% of your increase in your overall pay. This is something which is which is a new one which is introduced under the section 411 for the key audit partner. Gifts and hospitality I've talked about. Litigations. Now, when litigation with an audit client occurs, and this is very, very important. Whenever there is a litigation with an audit client, there is generally the intimidation threat that happens. And there is always a fear that they might come, they are powerful, they might come back onto us. Even though you may be right, but the fear is very, very difficult. Also, holding financial interest is a no-no. It is applicable to everybody. Now, the other issue which comes up and which you need to evaluate on a case-to-case basis is guarantees given with an audit client. Again, whilst there are restrictions, where are there limits like 1 lakh, 5 lakhs have been prescribed under the Companies Act. Having said that, you need to start looking at it whether that has an impact in terms of creating a self-interest conflict, and that is very, very important. Business relationship generally leads to self-interest or intimidation threat You should not have none of your relatives or family members, close family members, which is defined, should have a business relationship. So is the case with a family or a personal relationship. Again, I cannot get into a personal relationship, whether personal relationship is only restricted to a director of a company or giving your children in exchange to the businesses that you're getting from them in terms of the family, because you're a successful professional services firm, they're a successful company, so therefore both the kids gets married. So whether that would create is something one should look at it from a personal relationship perspective. Avoid to the extent that is possible, because if you have an auditor and you have that relationship, better to step down, because you will still have that self-interest threat or a familiarity or intimidation threat. If any of your directors, officers, employees have of the client if he has served there, or vice versa, either your team member, you take somebody from the client who has served as a director and all of this, at both places, you need to make sure there is this, intimidation threat, and there is a cooling period that is required up to 2 years or something. 6 months to 2 years is what you need to look at, depending upon how much influence you have had on that. Employment with an audit client, answer is no. You cannot have an employment relationship. Again, you cannot have somebody, you are an auditor of a company, but you cannot, or for instance, you are an employee, you are a chartered accountant for a trust, but you cannot be signing that as in this one. So you need to look at it. Temporary personal assignments, you should not loan your personals to audit clients. Somebody might say course sourcing is possible, that is on an internal audit client, but not in your audit client, because in an audit client, if you do temporary assignments and loan to the personals, and again you have to give an opinion on the same information that is derived by your people, it will be a self-threat or a familiarity or advocacy threat. Long association with personal with an audit client, you need to be very, very clear, and this is mandatory. If you're an engagement partner on a client for 7 consecutive years, you cannot be auditor, you cannot be a partner on the engagement for the next 5 years. If you are an EQCR for 7 cumulative years, the cooling period is 3 years. If you're a key audit partner, 7 years, cooling period is 2. But if you have a combination of both of you, were an engagement partner as well as a key audit partner for 4 years and above, you have to have a cooling period of 5 consecutive years. And I think this is very, very important for every audit client that you have. Now, the question that comes up is that during this cooling off period, you should not be involved or undertake or advise client or be the relationship partner with that client. And I think this is because what happens is the very objective of to have this a longer session to be cut is only to make sure that you do not have significant influence again on that client, and that is what needs to be looked at. Auditors rotations have now come up through with the recent changes with the RBI coming through from this year, or probably because there are pushbacks from some of the NBFCs, it might come from next year onwards. This auditors rotations under Companies Act is a known one, 5 years term of 5 years of 2 terms for if you are a partnership firm, if you're sole proprietor, 5 years for 1 term, and all of that. Mutual funds, requirement of in private sector banks, auditor for EPF, you can't be an auditor for more than 2 years, and block not more than 2 in a block of 6 years. So therefore, you need to look at that aspect of it. We touched upon some of the partners rotation in respect of it. 7 years time on code 19, whereas here there is no change, but 2 years cooling period has gone and undergone significant change. Now, we talked about 4A. We'll talk about the other aspect of a non-assurance clients to an audit client. You need to look at the section 144 of the Companies Act, which talks about clearly what can be provided, what should not be provided. Accounting book service surely is a self-review threat. You cannot be, if you're an auditor, you cannot provide. Administrative services like filing forms for client, those are all generally allowed, but may not necessarily create a threat because you're only compiling information. For instance, you're compiling some returns and then filing it, uploading it. Valuation services, definitely you should not provide to a public interest entity. Again, these are the things we are talking about, public interest entities. It's likely to have a material impact on financial statements. Taxation services, I'm an advocate of having this mandatory, but this is now deferred. Permitted are only tax return preparations, calculations, and all this comes under this one. Internal audit services, statutory audit cannot, definitely not. This is something, an aberration that where a statutory audit can do. It used to happen in some of the companies. What happens is that you are a partner in a firm, but you are a director in another firm, and the director of that firm comes, X consulting firm does internal audit, and X firm does the statutory audit. So that is the reason why this has been brought in. There were cases relating to it. Very important aspect that has been brought in is that providing IT system services to an audit client is not allowed. Earlier, a lot of these IT work used to be done, reviews has to be done by the team which was involved in the audit. Now, this IT services is prohibited because it creates a self-review threat, and it's a very important part. Similarly, litigation support services to an audit client is not permitted. Legal services is not permitted to an audit client, because one way you say, I want to evaluate what is your contingent liability, I want to evaluate whether there's a provision or all that. The other way you say, no, I will review all the cases, and they give you a declaration saying that there is no impact. And after 1 year, let's say the case is lost, and therefore it becomes an impact. So the advocacy or self-review threat becomes an impact. Recruitment services, there is a prohibition in terms of recruitment services. So again, you can't be recruiting. You see, that is the reason why there is conflict of interest comes through it. Neither you can take people from the client, nor you can do anything for the client. So this is something there. Providing corporate service to an audit client is not allowed. Management responsibilities has been included in the audit client. What are the things that should not be done, what should be done? Because you need to be very careful. If it's an audit client, definitely a no as far as taking the management responsibility. Word processing, administratives, and all of these are only information. This doesn't really materially impact. If you look at the special report on special purpose financial statement, and this is a very important element that one should note. Whenever you issue a special purpose financial statement, you need to identify to whom it is being given. You need to identify the restriction on the use and distribution of these information. This is very, very important. In your report, you should sign, this report has been issued only for the primary purposes of bank for issuing the next installment, or for let's say regulator to comply with this fair valuation, or to somebody else for tendering purposes for this. Only in those aspects that are allowed. But you need to give the understanding of the purpose and the limitations very, very clearly defined in your report. And this is a very important aspect which typically gets, by oversight, get missed. So you need to make sure this is done. Now, this is a new provision that has been introduced. Whenever there is a breach of independence, earlier there was no concept of breach of independence. Everybody used to do whichever way for it is. Now, if there is a breach of independence, you need to evaluate whether you want to continue the relationship, whether it was material, whether you want to suspend it, or you want to eliminate the interest that has been created, or you need to check with any legal person whether this creates a non-compliance. This is a very critical aspect of it when you deal with breaches. So, for instance, what could be a breach? I'm the auditor of the company. My wife is the CFO of that same company. Is there an independence breach? The answer is yes. You might say, no, she's a professional, she's got this, she's based on her merit. I am a professional working with this firm, got by merits, and therefore there is no breach. There will be a breach. You cannot say what is at home is the same thing what is applicable in the office. So if you have situations like that, or if you've got financial interest, or if you've got somebody of yours, relative or brothers or anybody working in that organization, all of these elements create a breach, and these breaches have to be addressed. The other aspect of independence which relating to compliances for assurance engagement other than review, you should continue to apply. It comes as a part of part 4B, includes all of these fees, gift, hospitality, threat and litigations, financial interest, loans and guarantees, whatever we have looked at it, more or less will be applicable for each of the assurance engagements. So this was first part, the volume 1, which talked about various aspects of it, what is applicable to professional accountants in service, professional accountants in practice, what is applicable to audit and review, and what is applicable to other assurance engagements. Then we have this other domestic ones laws that needs to be complied with. As much as we have to comply with the code of ethics relating to our own behavior, our own services, our own rendering of professional services, we are also supposed to look at from compliance to the laws and regulations. What does it include? Includes accounting auditing standards, guidance is issued by ICAI, engagement and quality control standards. Now this international standards on quality management is coming through. It called the ISQM, which is coming through, which is much more enhanced than the SQC. The standards on quality management, international standards called quality management, SQCM, ISQM 1 in India also is going to come through that, and that will be much more enhanced than the quality control standards that right now we have. Compliance with all the provisions of Chartered Accounts of 1949. Again, if you're a professional in practice, if you are a student who have gone through the auditing standards, all of these you would have applied at some point in time, and you continue to apply. You need to continue to apply standards on auditing. World over, and in India, the issue is not about an accounting. The world over and India, the issue is now only on auditing. How does your work paper demonstrate that adequate work was carried out by you in issuing an audit opinion? So therefore, standards on auditing assumes critical importance, and this is where SIRC has been running programs on auditing standards. I think more so it has to run through. NEFRA is coming through heavily on auditing standards, and an auditing standards is not ticking the checklist, audit checklist prepared by the AASB or the IAASB. It is about whether whatever you've ticked is reflected in your work paper or a documentation, and that is what is very, very essential. So you need to start looking at these or all of these very closely. If you are issuing an audit opinion, if you're issuing a review on any of the financial statements or financial results, or if you're issuing any assurance engagements or related services, all of these needs to be covered as a part of the process. Chartered Accountants Act 1949, the moment you pass CA, you will be given this beautiful book. And there are certain things where the management services are permitted. NEFRA, to some extent, they are not in agreement with many of the management services. They say if you're an auditor, if you're an audit client, you cannot provide any of this. But there are certain things which are permitted to do it if it is for a non-audit clients. And these are some things like management accounting system, cost control value systems, personal recruitments, and all of this as a part of the processes. I'm not getting into the more of that because this is something which has been there for many more years. Now, what are the other things which have been prohibited for a certification of practice? You can't use other than a CA. So you can't say chartered accountant, gold medalist for this thing, ever successful, this one, something like that on your, I mean, I've seen some of the cards which talks about the first ranker. Recently there was something like the first time past chartered accountant is marrying a first time passed out girl, only a first time passed out friend should come. So something like that, while they were innovative in their thought process, but this is prohibited as far as the CA is concerned. Again, if you're a director's office bearers of political parties, you can't use that position in your visiting cards if you are a person in practice. Members who are members of ICAI and ICAI should use ACS or ACMA, but cannot use the words company secretary and cost accountant if it's a part of the process, if they are a part of your organization. Permission to mention qualifications of other institutions which has got MOU with ICAI. If the membership cannot be given if it is less than 21 years, unsound mind, undischarged, insolvent, convicted by the court, and again the period of sentence is about 6 years on all this. The name removal again is given on various basis. Now these are some things where if there are falsely you claim to be a member, there are convictions about $1,000 and $5,000 if you continue to do so. There are many people who do it as the accountant, is not as a chartered accountant. They may put CAs in brackets and then do it. So I think in parentheses. So there are some things which people do it. They are against it. Companies cannot practice as chartered accountants. Only LLPs are permitted to do it. Now, again, there are certain things which comes up, in a normal, in a company and in a firm. Many times there are correspondence which happens and the partner is not available. And sometimes signatures are done. So you cannot sign any document which goes for attestation. If you allow any other person who's other than a chartered accountant or in practice and has been a partner or in his individual capacity, only can sign. Other than that, he cannot sign, and there are violations, there are penalties which have been imposed. Wherever there is a branch, you need to identify who is branch in charge. This is mandatory as required under the guidances. So if it is not there, you need to identify only exceptions where there are within same areas, within the city of radius of about 40 to 50 kilometers, you don't need that. Misconduct, I will take few part of it and I'll ask Mr. Prasanna Kumar to deal with more detail about it. But again, professional or other misconduct is again an omission. This is a basis on which a disciplinary action is taken on any of the member based on the conduct it's under the circumstances. Various aspects of it, which is your false certificate retention, paid assistance, fabrication, coercion in securing fees, misrepresentations, all of these are various aspects of it which gets covered into it, which will ask Mr. Prasanna Kumar to go in detail to take through all of this. Some of the things which I will just touch upon, not in detail, but in terms of the understanding of the first schedule of this one, when it's to be deemed guilty, because if you allow somebody other than a chartered accountant, then that is where it's deemed guilty. You can't pay fees or share fees to people other than who is a part of the partner or the business. You can share fees with which is approved by the council with the company secretaries or cost accountants. There are certain exceptions where you have percentage of fees you can charge, the contingent fees that I talked about. A legal representative or partner is entitled for share of profit, goodwill, which is allowed if the partnership deed allows. So sharing of fees with non-member fees, these are all generally which is covered as a part of the fee charging, which is included. So this I'm just skipping it because I want Mr. Prasanna Kumar to include in his discussions, because that is the comprehensive work, and especially the disciplinary part of it, which you know. But one thing which stands out in schedules clause 6 of part 1 is that you cannot respond. If you're a professional accountant in practice, you cannot respond to any tendering which are exclusively for CAs. And this is something which is attest function. You cannot be tendering, you should not tender. But if the tendering has what is called a minimum fee prescribed and is open for others to respond, then you can do it. Others. So this is where only when it is open to others, if it is exclusively for chartered accountant attest functions, you cannot do it. And I think this is a very important aspect of it, which is there. Now, the other aspect in clause C which really touched me was, I mean, I was just trying, you cannot be advertising, teaching or coaching activities for any by any member. The teaching shall not exceed 25 hours in a week. And I don't know how will you monitor this. If you have got coaching institutions, if you have got professionals, you have got learned professionals, you will find them spending time teaching, because our teaching fraternity needs good teachers like them. And how are you going to monitor them? I think this is something which is very, very critical. How do you monitor is a different thing, but you need to be clear on this. But it should also, members cannot also advertise teaching and coaching activities. But if you see generally, members do not advertise. Members through their institutions advertise. So members may put board outside coaching center with name, subjects taught, and this is something which is completely different, because if you're putting an advertisement and if you come to the board and say this is what done by me, I think that is conflicting by themselves. You cannot share profile with prospective clients unless you get a mail. You cannot go and submit a proposal without getting a letter. So make sure that you get all of these letters as a part of the process. Television movie credits, again, same thing, the name cannot be different compared to the others in the credits. So if you're a CA, you'll talk CA partner X, that's what should be given. You cannot solicit inquiries through roving inquiries. You cannot be saying that, we are providing services, this is what it is, do you need any services from us? So those are the things which are not allowed. You cannot solicit canvassing for continuation of audit, so you cannot get into all of this. So these things are there, what is prohibited as part of the first schedule. Now, this also stands out, and I think why this stands out is an advertisement was published in a newspaper containing the member's photograph, wherein he was congratulated on the occasion of opening of his office. He was found guilty by the council member and by this one. But if you find off late, there are some things which are coming up in the social medias and all of this, saying that they've opened office, this is what it is. Probably those firms which, which are smaller, could be smaller firms or medium firms, from a perspective, they are good. They want to share that happiness, that, the growth story. But somehow you need to be cognizant about it, that if there is somebody who uses, or a newspaper, because I see in many of the Hindi, some of this Hindi news vernacular, I don't want to use but the vernacular newspapers, which gets and says that, you inaugurate office, somebody gave it, be a very excellent growth and all of that. So those are things, please avoid it, because these are some things, it may not come to you now, maybe probably down the line, somebody might pick up these things and come back against you. So be careful on these aspects of it. So these are some of the clauses, reports, and which I'm not talking about, because which will be covered by Mr. Prasanna Kumar. Logo, use of logo is not permitted. You can use a CA logo, but you can't use other than that. Again, you need, for every client that you accept a retiring auditor, make sure, and I think this is my one suggestion to all the professional accountants in practice. Please do not accept clients because some other audit firm said that they don't want to do it, because the risk that you're taking. So, for example, could be a tax audit also. So the risk that you're taking, that without even a knowledge, you're signing off, without even checking with the previous auditor, why did he resign, and whether any fees are pending. So I think you need to be little cognizant about this. Just do not take any client that comes your way, because anybody who comes to you in the last moment believes that there's something which has gone wrong with that client, and be cognizant about it. So notice to, send, please always make sure that you send, no objection letter if there are any objections to the retiring auditor, and please get it. You can send it through mails also, you can get a response. Unjustified removal of orders, and this is a very important aspect which has been touched by the institute, and it is a very important point. You audit when an auditor resigns, right, and or does not offer himself, you need to make sure that if you are the incoming auditor, make sure that the reasons why an auditor has resigned, it can't be for general reasons. Suppose you can't say that I was busy, so therefore I resigned. It cannot be the case. The incoming auditor should get into the details, understand it even before he accepts it. And this is a very important aspect of it. Now you have to send to MCA, you have to send in a copy to ICAI, all of these, but just make sure that whenever there is an unjustified removal of auditors, just don't say that, been done, but if there are any such cases, please bring to it. Fees, again, as a percentage of fees, you can't charge, but there are exceptions to it for as a liquidator, cooperative society, direct tax work, as a valuer in certain MCS services which are permitted by the council, fundraising services, debt recovery. These are where it is permitted to be there. Again, if you are a director promoter, generally it is allowed, but you should not have substantial interest. All of these you need to make sure. You should not be in full-time employment with those concerns. Make sure this is something which is very, very clear. So these things, Schedule 1, Schedule Part A, Part 2, I'm just giving it to Mr. Prasanna Kumar to address it, because he has got a detailed presentation relating to this. But couple of things which are very important is, especially on ethics related matters. There are a lot of cases that are coming through in terms of non-compliance, non-verifications, issuing wrong certifications, issuing wrong certifications relating to revenues, not verifying certain aspect of it, not carrying out audit in accordance with Ind AS and all of this. Just make sure, or not having a peer review certificate, or not quoting a UDI. There are so many things that have come through as a part of cases to the disciplinary committee. Just make sure that all of these are taken care and addressed as a part of the process. I will come back to you in case if something is not covered during the votes or during the Q&A. But nevertheless, on the ethics part of it, again, this is something we can talk about ethics for hours together. But if I don't change my behavior and attitude, if I continue to do what I've been doing in the past, the results will not be different. If I have to change, I have to make sure that I actually follow it in letter and spirit. Only then, as a professional accountant, whether in service or whether in practice, I will be able to comply to all the standards that have been prescribed. We have to be the torch bearers of the institute to demonstrate that any of these issues that comes through it for non-compliance, whether it's an independence threat or in terms of dealing securities with the company where I audit, or take loans, or have business relationships, these are some things we need to avoid it. We need to follow the principles. We cannot allow our accountants or our staffs to do everything. We as professionals, we as chartered accountants or experienced auditors have to ensure that we comply with all of this. The next 20 to 25 minutes, I'll take you through the regulatory changes, because these are something which I thought is important. You are aware of it, you will be aware of it. But having said that, it is also important that you should be knowing as to what the changes that are coming through as a part of the process. Now, if you look at some of the regulatory changes for auditors to consider, definitely one of the things which is going to come to us and bite later on in 2022, focus on the changes that have come up in the auditor's report. The auditor's report talks about a client where we are issuing an audit opinion, that whether there is a trail or an audit log that is left behind, and every trail and audit trail that is left behind, whether there is a log for each of this. And this is going to be the toughest aspect of it for all of us, because if people are using Tally, people are using Excel sheets, people are using many of these aspects of it, need to be cognizant of saying that audit opinion or an auditor's report is going to be different. And that is something which I would want each one of us to be clear of. What is the other thing which is changing, which is really going to impact all of us together? Now, many of the disclosures that have come through CARO 2020, which is approximately 47 sub-clause and sub-clauses include, while it is 21, but overall, including sub-clauses, about 47. Now the financial statements have been aligned with CARO. I think that's a very good step by the MCA. But what is more tougher for all of us is that the opinion that we are issuing for 2021, March 2021, because this is applicable from 1st of April 2021 with a comparative of the previous year. It's better all of these informations are captured now itself, not in 21-22 when we come for the March 22 audit. This is something which we need to be very, very clear about. It is not the applicability date. It is the date in which this is applicable, the previous period, because if you are issuing an audit opinion, the previous period also has to be looked at. That is a very important aspect. Now, when the amendments was done, it was done in 3 divisions. Division 1, where the old company accounting standard rules 2006 applied. 2, where the Indian accounting standards, companies Indian accounting standard 2015 applied. And then the 3rd division was the NBFC rules, which are drawn in compliance with NBFC, because there are specific norms that need to be compliant with it. Again, this is not in detail, but just to make sure to give you an understanding how it has been aligned to CARO. There are a lot of these disclosures which we require under CARO. And if you look at Division 1, Division 2, and Division, and this is only a bird's eye view that I'm giving it to you. The title deeds of immovable property not held in the name. Revaluation, again, there's a percentage of about 25% and all that, which 10% and 25% you have to give. Proceedings over any holdings or the Binami properties you have to give. If you have done a revaluation more than 10%, you need to give that if the registered valuer. Borrowings on the basis of security of current assets, quarterly returns of financial statements filed with the bank or financial institution are in agreement with books of accounts. If not, summary of reconciliation discrepancies. This is a very critical aspect of it. If you are a listed company, you might do what is called as, I will do it quarterly, so there is a quarterly closure books. But if there are companies where Indian accounting standards or a company accounting standard rules itself apply, and if there is no quarterly statements that have been filed, I mean, quarterly statements, financial statements are not drawn up, how are you going to verify this? And this is an important aspect that one needs to look at it, discuss with the client upfront and tell him whatever you're giving to the bank should tie up with your financial statements or to the books of account, not the financial statements, to the books of accounts. The other aspect of it, which is very important, which is given, is loans, advances, and the nature of loans granted to promoters, directors, KMPs, related parties, either payable on demand or without specifying to be given. Utilization of borrowing for purposes other than which was taken. Utilization borrowings could include all borrowings. Could be a cash credit loan, could be a packing credit loan, could be a term demand cash credit demand loan, could be a term loan, could be anything else. You need to include all of this as a part of the process. If you have transaction with a willful defaulter, and this is a very important aspect. A willful defaulter is what is defined either by the banking can define it or any other agency could have defined as a willful defaulter. And a willful defaulter can be within your own group which you are auditing also. And if you have transactions relating to that, you have to do a comprehensive analysis to that. That means that person was declared as a willful defaulter, and if there are any defaults and if there are any transactions with that, you need to give all of this. Ratios, I'll touch upon, and details of undisclosed income. Now, another change which has come up is the prior period errors. And I think, prior period errors in the old accounting standard was not there, but in the new accounting standard, it is there. So whenever there is a prior period errors in the old standard, which is your company's accounting standards 2006, you always put it as prior period error adjustment and do it. But now you need to look at it. If it is material significant, you have to start restating it both under the accounting standard. The balance sheet will be called as a restated balance sheet for the period. And the restated balance sheet details should be given with the reconciliation between opening, changes, reasons for changes of revaluation or errors, and then give it. And this is something which is very, very critical, and just be mindful about this. If you have missed out anything, you cannot adjust in the current period if it relates to earlier period. The other aspect which you need to give is a shareholding of promoters, and there is a breakdown which you have to give for all of them. Earlier it was 5% is what of the shareholdings you should give detailed shareholding relating to it. Trade receivables now aging is to given from the due date of payment, disputed and undisputed. There is credit impaired and credit impaired and disputed. So there are various aspects that you need to break it down between Indian Ind AS as well as the non-Ind AS. Aging schedule for capital work in progress, intangible assets under development. Just imagine aging schedule to be provided. For CWIP, intangibles under development whose cost has exceeded. That means the cost to completion has exceeded the cost you have to give from the original plan as to why this has got changed, which was not there before. Fair valuation of investment property for disclosure purpose should only be based on registered value. Relationship with struck-off companies. Delays in registration of charges or satisfaction of charges, details and thereof. That means you can't be saying that earlier you had 60 days, 30 days, 60 days. Now all of these information should be captured. Compliance to the scheme of accounting standards, details of funds, guarantees given, taken to intermediaries for ultimate beneficiary. It could include joint venture, associate, Subsidiaries, every other person. Details trading of in cryptocurrency or virtual currency, which is now the new norm, you need to look at it. Unit of measurement, which is already there. Now, there are specific things that need to be given. Current maturities of long-term debt should be given in Division 1. Current maturities of long-term from other financial liabilities also should be given to borrowing. So this was an additional part. And security deposit from long-term loans also has to be specified separately. I'm just flipping through this, some of these aspects of a shareholding details. Any changes in shareholding should be given. Trade payables periodicity is 1 year, 1 to 2 years, 2 to 3 years, and more than 3 years. Bifurcation between payables to MSMEs and disputed dues to MSMEs and other dues. Disclosure should be made to where there is no due date of payment. Trade receivables, again, undisputed and disputed. Age classification, all of these. More along with separate disclosure for inform of unbilled dues also should be given. Now, unbilled dues was not there before. Now, unbilled dues has to be identified separately. Undisputed and disputed should be further categorized between good and doubtful. Even within disputed also, you need to identify what are good and what are doubtful. Title deeds not in the held name, we have already talked about. Revaluation of assets only should be done by the registered valuer. Now, disclosure on loans and advances, they've identified amount of loans or advances in the nature of loan outstanding, percentage of loans outstanding. All of these should be given as a part of the process, which were payable on demand, were without specifying item. And these are very, very critical aspect of it. Benami properties, you had a lot of sessions on this, but this is something which you need to give it as a part of the disclosures. Details of borrowings, very important. Now, we have the reconciliations that has been provided. If there are summary of reconciliations which are not which are explained, that also needs to be provided if they are not in agreement. Willful defaulter means, again, it has been characterized by the Consortium of Banks and by the Reserve Bank of India. Please look at all of the details where the company has been declared as a willful defaulter. Relationship with the stock of companies, give the information of investments and securities, receivables, and all of this. Again, this came up only because that you had a lot of these Benami companies which came up, overnight companies that came up, and that's the reason why these issues came up. In fact, there were more than 2 lakh companies that got struck off during a period of the first time when they had that scheme. So these are some things which you need to be cognizant for. Registration of charges is fine. Compliance with the number of layers is companies. Ratios, current ratio, debt service ratio, return on equity ratios, all of these needs to be included as a part of it. Utilization of borrowed funds and share premium should be provided in detail. Advanced loans, invested funds, and all of this. Compliance with approved scheme of arrangement, in compliance should be given. Undisclosed income, I think this is a very critical aspect. If you have an undisclosed income and that came through as a part of the income tax survey, how are you going to address this aspect of it? Because somewhere you will find saying that the company agreed and said that this is to be complied with, and they've not followed it. And they've agreed to make an additional payment, and you have tested all the financial statements, you've given a true and fair view. And when you look at the undisclosed income, the true and fair view percentage is much, much higher. How will you deal if it is an Indian accounting standard rules? How will you deal if it is in company accounting standard rules? Becomes an issue. How will you deal on the opinions that you have issued if there is something which is undisclosed? Unrecorded income, related assets, not disclosed is a serious issue. You should think about from an internal control reporting perspective too, whether you should have to qualify that report. Two, you need to look at whether under what circumstances you can withdraw, or you can give an qualified or an adverse report if such informations are so critical and material, because it will have an impact on the opinions that have been issued in the earlier periods. Lot of discussion, lot of heat has gone on CSR amount spent. When should you make provisioning? How should you do it? There are clarifications that have come through by the government in respect of excess amount spent last year, how you can carry forward. All of these are very, very critical. In fact, there is a lot of emphasis given on CSR disclosures. If you are a professional accountant in practice, make sure that you give importance, close attention to the CSR guidances issued by the ICAI very recently. Look at some of the guidances issued by the other institute, professional institute. Look at some of the circulars that have been issued by the MCA. make sure all of these are captured. There are clarity in terms of what happens to the earlier period, what happens to the amount that is they're not deposited with the bank. All of these becomes very, very critical. Details of cryptocurrency, virtual currency, again, this is a new thinking which is getting through it, but there are, you know, bad vibes that have come across various in other countries, including China and all of that. Now, this is something which is still to be looked at it, but you may have some clients which are in foreign-based companies which must be dealing in cryptocurrency, and if that being the case, you need to look at that. Now, this is the point which I will focus on, and before I hand over to Mr. Prasanna, you know, a couple of things. You know, accounting software for maintenance books of accounts, recording audit trail for each and every transaction, creating an edit log for each change made in the books of account from the date of the changes made, ensuring that the audit trail cannot be changed. This is a responsibility, and I'm not sure how we are going to address it. Many companies, even large companies, they may have a beautiful software. They may be running on SAP. They may be running on SAP HANA. You may have the best Oracle, anything. But when it comes to accounting, they're on Tally. Or they may be using for consolidation something else, an Excel sheet, or some QuickBooks, something else. How do you ensure there is a recording audit trail? And this is common. I can give you cases, give you industries. Take hospitality industry, take life science, hospitals itself, cash transactions. How will you have audit trail? What software we talk about? How do you record revenue? Take restaurants. How will you deal with it given in cash? Take, for instance, real estate, which deals in cash, and how will you deal with this audit trails? And I think this is the most important aspect of it for us as professionals, accountants in practice. How are we going to get control over the specific aspect of the trails and the edit logs that it cannot be? And we are writing. Tomorrow, you take an instance of this undisclosed income that has come through. If you had this audit trail, it should have captured, right? Now, how will you establish that? Maybe somebody might say, sir, that was only the last earlier period. Anything from now onwards, we can have it captured. Think through this process about it. And I'm again trying to tell you, as professionals in practice, engage people who have got knowledge in computers, engage people in, you discuss, deliberate at the institute, in the study group, try to understand as to what can we do. Again, I'm telling you, don't go by the guidance notes that comes through it. You know, the guidance note on ICAI, right, is comprehensive, using a COSO framework, right from control environment to control activities, to risk assessment, to control activities, to information and disclosure, all of that, to monitoring. But the fact remains is, if the ICAI was operating effectively, why should there be errors? Why should there be frauds? And I think this is something which we as professionals start looking at it. Trail, edit log, trail cannot be disabled. That means we need to have somebody who's a specialist who can understand this, or we ourselves should be trained in such where we will be able to do it. And where we say that we don't rely on automated controls. When we, many of the companies, when the system failed, something was not working. Take the COVID period, extension of work that was not working. How are you going to have the trail for each of these transactions? From a what is called as regular updates, you move from a live entries to what is called a batch processing, from a sequential to batch processing. How do you deal with that? So these are some of the things which we need to invest time. I would urge the SIRC and everybody from the groups, have formed a study group. Look at it, how do we can get this audit trail? IT is not the audit trail. I'm again giving you, everybody say they have and everybody think goes in audit. What if companies are maintaining in books manually, where the IT fails, automated control fails, there are deficiencies in automated controls. How will you deal with it? Think through this aspect of it, because this is something which I would want you to think. The other aspect of it, which has been brought in very clearly, details of differences between amount of valuation done at the time of one-time settlement and the valuation while taking loan from banks and along with the reasons thereof. We have to give this certificate. We have to bring this in our report, as or it should be included as a part of the report to the board of directors, not us, but board of directors. Look at that aspect and validate that. And this again, because from an SA 720 perspective, we have to look at each of these information that are captured in the board's report on section 134. How are we dealing with this aspect of it? The other aspect which we should look at it is a reasonable and appropriate audit procedure or disclosure of funds guarantees security. Now, this is a comprehensive one, end use of it. How are you going to ensure the end use by the ultimate beneficiaries? How are we going to know? Because suppose we might say to be given for this, we don't even know the ultimate beneficiary, how they're doing with that. And that extent is what we need to be very, very careful about it. Some of the changes in CARO, again, this is only from a perspective, this requires a comprehensive one. Again, working capital limits in excess of 5 crores, Benami transaction treatment of assets, overdues more than 90 days, fresh loans, existing loans, cost records, internal audits. In fact, one of the things we should look at is internal audits. You need to be a part, you should review all of this as a part of it and see whether it impacts. Funds raised in short-term bonds coming back, those are things which you need to look at it. Whether the auditor has considered whistleblower complaints, and this whistleblower complaints is a non-starter even in many of the companies that I know about. Whistleblower complaints is something you will hardly find anything, barring some of the MNCs which are regulated from abroad. Whistleblowers in India is just no whistleblowers. In fact, this is something. What do we write? This is something which we need to deliberate. We need to deliberate a fraud on the company nature, amount involved, because why should we take that as an auditor? Why should it not be with the company? I think this is something which we need to deal with it much more comprehensively. Internal audit reports make sure that you go through it, look at all the non-cash transactions, look at if there are any objections raised by the subsidiary auditors and or the outgoing auditors. In fact, this is something which you need to look at it as a part of it. You have to comment on the financial ratios and all of that based upon whether there's uncertainty to meet the liabilities. Large part of it is casted on us. You need to look at it as a part of the process. All right, so that's all I had from my side. Thank you very much. So if there are any questions, we will take it at the end, but I would want to hand over the session to Mr. Prasanna Kumar. I could have gone long, but Mr. Prasanna Kumar has been very patient and he's been very kind to go through this. So over to you, Mr. Jalapati and Panaraj, and then hand over to Mr. Prasanna. Thank you very much.
Thank you, sir. Thank you so much for our excellent presentation. So, of course, just 2 hours gone. And the way in which you explained is very well appreciated by members. We are getting feedback, excellent feedback. Thank you so much, sir. Now I request Panaraj sir to introduce our Central Council member for the next session.
Yes. Good evening.
Members, after Kumar sir session, we will have interactive session, maybe 15-20 minutes. We can get clarified our doubts relating to new code of ethics as well as the discipline mechanism.
We're happy to have our beloved Central Council member Prasanna Kumar sir today, and I take the pleasure of introducing him. But for the information of both of you, it is almost 1980. I saw the highest number of attendance, which I think is the highest record in these webinar times. So thank you, Ganesh sir, for your presentation. And it has never come down before 1930, all along. So with this very useful. We never expect so much of response to such a program, which is not technical, as rightly pointed out by the chairman. So now I take the pleasure of introducing our very dynamic Central Council member, Prasanna sir. He is a bachelor in zoology and MA Sociology from Tirupati University, and became member of the institute in 1984. He has been occupying several positions in the institutes right from SICASA of the branch and then regional and central council. During his student days in the CA course, he was secretary and vice chairman of the SICASA and Chennai in the early 80s and made significant contribution to the students' fraternity. He served in Visakhapatnam branch as treasurer, secretary, vice chairman, and chairman of the branch during the years 98 and 2002. As member of the SIRC from 2007 to 2016, and he was chairman of the regional council in 13-14, and he was elected to the Central Council for this term 1922. He is vice chairman of the committee for members in practice, which has tied up many beneficial schemes for members like Tally, LICT, LIC term insurance, general insurance products, Heal antivirus software, etc. He is also convener of the Career Counseling Directorate, which has empaneled many CAs as counselors to propagate CA course amongst young students through branches and regional councils. He is a standing member of, and also presiding over the board of discipline. He spoke in many seminars and conferences organized by ICAI on bank audit, company law, ethical standards, industrial policies, and budget analysis. He is also a very good sportsman, and he has represented as a manager of Indian volleyball team to Qatar. He has a homemaker wife, and his son and daughter-in-law both are chartered accountants, and daughter is MS Electronics and from New York, and working in a multinational company in Hyderabad. With this, I present before you the versatile personality, Prasanna, to speak on disciplinary matters.
Yeah. Thank you, Panaraj. So I'm audible, visible and audible both.
Yes, sir.
Yeah. Thank you. Respected CA Jalapati, the dynamic chairman of Southern India Regional Council of SIRC ICAI, and the CA Panaraj, the secretary, CA Ganesh Balakrishnan, the immediate speaker who had dealt with you set the tone, not only tone, he has dealt with the subject very lucidly. And my dear participants, so good evening to all of you. It is my proud privilege today to participate in the wonderful program, or most sought after program subjects, which is organized by SIRC. And I'm again delighted today because Ganesh Balakrishnan was the speaker. I am also sharing the dais, virtual dais, along with him as a speaker. This is the first time I'm sharing dais. Many times I heard him. That's why whenever I see him, you have seen the way he presents the webinar also. You have seen for last 2 hours, the same tone and tenor, start to finish, he has done. But only one thing was missing in him. I've seen him speaking on Companies Act 2013. He is the person who was introduced 2013 Companies Act to the entire fraternity, not only in southern part, but also the entire country. I think there is not a there shouldn't have been a single day in 2012 and 13 where he has not spoken about 2000 Companies Act. And the way in which he used to speak, particularly now virtual, maybe he was containing himself when he's at dais and speaks, the body language he uses, the type of Tamil Nadu he speaks, he'll speak in Tamil. In Andhra Pradesh, in Telangana, when he speaks, he used to speak in Telugu, and the articulate was excellent. There are few speakers who speak in those lines, and Ganesh Balakrishnan, one amongst them. So he has done a very good job. In fact, I was throughout the 2 hours in his presentation, I listened to him. It was, in fact, recapitulating whatever I know about ethical stance also today. So nice presentation, Ganesh. And now I'll go to the subject proper. Friends, Ganesh has rightly put it, that ethics is not something somebody needs to teach us. Ethics is there within. The day you are born, Even the children, they have got ethics. And up to the day you go away from this part of the world and you keep practicing ethics, it need not be taught. Number two, as I told you, ethics is a integral part of our life. And if one knows that what he is doing is wrong, he will never do it. Even, for example, even a murderer, he feels, I am murdering somebody, it is wrong. If he feels, if his heart says, he will not do it. There are some circumstances say that is your duty to do it. That's how he performs. Thereby, ethics is the one which is not only preached, it is practiced by everyone. See, as you know, I have been invited because I think Jalapati has invited me to come and speak because he's aware I am a part of the Board of Discipline for the last 3 years. First year I was a member. Last year I was the presiding officer of the Board of Discipline. Consecutively, the second year also, now also presiding of the Board of Discipline, which deals with first schedule case. Anyway, I'll come a little later. See, I have seen during the course of the hearings that many chartered accountants are the scapegoats. It's not they made a mistake. Whatever the mistake they made, there are small errors, small minor mistakes were there and minor offenses were there, but ultimately they have been punished, and not only they have been found guilty, they have been punished up to the removal of the name also. They are not doing it intentionally, without their knowledge, without knowing what are the precautions you should take when you perform a attest function, when you issue a certificate during the course of any audit function. And moreover, we're all aware, chartered accountants they are the trouble receivers. They are the troubleshooters also. The client has got some trouble, maybe personal or with respect to some government agencies, with respect to some fiscal laws, anything is there. The client only says, sir, these are notice I have received, I am giving it to you. Then he sleeps. But the notice, to comply with the notice or the assessment proceedings, whatever it is, all those things, if you have to do it, this is a mistake committed by the client without discussing with you. He committed a mistake. He came, notice has come. He is committing a chartered accountant as a post-mortem. He kindly defend my case. The person who committed a mistake is happily sitting at home, and the chartered accountant who accepts the assignment, he keeps working day and night. Sometimes he will not get sleep. Even the dream also, the client case will be coming in his dream also. So much is attached. This attachment is good, one way of looking at it, but it is bad when it comes to your personality. I tell you, friends, the maximum number of cases which are filed by a particular second schedule cases which are filed or arising out of dispute amongst the partners and dispute among the promoter directors. We involve with them and handhold with them and help them in doing their business as advisor, as a part of their family. We advise them. Ultimately, if there's a dispute between the partners or the directors, as I told you, the disgruntled director, he always feels this chartered accountant, my auditor, is there A and B are the partners. The B feels the chartered accountant is always favoring A and he is not favoring B. Even do you think that A is also with you? A always feels that the chartered accountant is favoring B, is not favoring me. Thereby, he is not satisfying both because both are disgruntled in some cases. They know what are all some deficiencies in their business, some deficiencies whatever they're aware, and they make a case against the chartered accountant. The dispute is between A and B. They're happy, but they file a case against the chartered accountant where the poor chartered accountant, we have to go defend our case before the disciplinary directorate, before the Board of Discipline or disciplinary committee, as the case may be. So friends, that's why I'm telling you, we should be careful. We should not have that bondage. Gone are those days. Loyalty was there amongst the clients. Today, you have to feel that if the client comes for some service, he is appointing you for that particular service, render the service, and put up your bill, receive the payment. There is the matter. That type of commercial relationship, I don't know the word commercial may not be the right word, but still, such type of relationship should be there. You should not go travel beyond that. So that should be eye opener. Even we are aware. In some of the chartered accounts in metropolitan cities like Hyderabad, may not be Hyderabad to some extent, but Mumbai, they are all purely you appointment me for assignment. I done my assignment, you pay my fees and go. Nothing. We are no other further relation between them. That should be the type of thing we should also go. Otherwise, we are caught in between the partners and the directors. The friends, having introduced the subject, I'll take you through the entire disciplinary mechanism. You may ask, sir, why I'm interested in disciplinary mechanism? Unless somebody files a case against me, I'm not that much interested. I'll tell you why. I'll just briefly take you through, because many chartered accountants, whenever they put a signature on a certificate, on an audit report, or anywhere if they put a signature, immediately what comes to their immediate mind is, I have to generate UDM. Fine, that's good. You're following the guidelines. Second thing is, when I put in the signature, will it land me into a trouble later on, so that I have to go before the disciplinary mechanism of the institute? That's what is coming in the mind of the people. So why it is so, the next thing is, what will happen? Suppose somebody files a case, what will happen to me? What are the procedure? This is there in the minds of everyone. So I'll just briefly take you through that particular mechanism. Then I'll go to the some of the case laws which I've noted down. The friends, the Chartered Accountants Act 1949, a very simple act, very simple book, also small book, very simple language used. There are certain one particular section 21 and 22 which deals with the entire mechanism. So here there are two types of cases are there. One is offences. One is first schedule to the Chartered Accountants Act 1949. The second one is second schedule. Whatever the first schedule cases are there, all these first schedule cases, I'll tell you what is first schedule. They come before the Board of Discipline. There is only one Board of Discipline as per the regulation for the entire ICAI as a whole. Whatever the cases fall under second schedule, those cases come under the disciplinary committee. Disciplinary committee, we have got 4 benches. Bench 1, 2, 3, 4. So let's say for bench 4, it takes care of all the cases coming within southern region. Let us say bench 2, it may be central region and eastern region. Bench 1 may be western region. So who will be heading this particular bench? Friends, we have got such a great system. When a southern bench is there, none of the central council members of the southern bench will be part of that particular bench. Members from other bench will be there. So that the conflict of interest is ensured here. That applies to the president and vice president also. If the vice president is from eastern region, he will not be there in the bench of eastern region. He will be in some western region, some other region. So this is how it is done. The constitution is, Board of Discipline has got 3 members. The presiding officer will be a central council member who has got knowledge in disciplinary mechanism. 1 member will be another central council member. 1 member is nominated by the Government of India, Ministry of Corporate Affairs. This is the constitution. Here, for a quorum, whether government nominee is there or not, if the quorum of 2 is there, we can continue the proceedings. However, as a best practice, we don't do that. Unless and otherwise, the government nominee is there, we don't conduct the meeting at all. If the government nominee is busy, we'll reschedule the meeting. That is the best practice we have in the institute. Similarly, in the disciplinary committee, each bench consists of 5 members. The presiding officer will be either the president of ICAI or the vice president of ICAI. And the members will be 2 members nominated among the central council members, 2 members nominated by Government of India. Here, the quorum is, unless one government nominee is there, we cannot conduct the meeting at all. And the government nominee, they have got very big role to play to see the system is in place. Friends, I'll tell you, so far whatever the cases that have been pronounced by the disciplinary committee, a Board of Discipline, all of them have been unanimous. There's not even a single judgment so far, as far as my knowledge goes, that it was decided by majority. That is a very good system that you have. And if somebody is aggrieved by the disciplinary, the judgment that finding of the disciplinary committee or Board of Discipline, they can go to appellate authority, which is for which the presiding officer, retired High Court judge, and 2 past central council members and 2 members nominated by the Government of India. So these are this. Now I'll take you through what are all the. I'll take you through what is the first schedule, what is second schedule. First schedule cases are, they are mostly amongst the members and not much related to the attest function, not much related to the certificate that issue. That is the professional misconduct. The true professional misconduct cases will not be there in first schedule. All those cases come under second schedule. The first schedule has got 4 parts. Part 1 has got 12 clauses. After that, 4 clauses are very important. That also Ganesh has dealt slightly with that one. So you should not solicit for the professional work. That's clause number 6. Clause number 8 is if you fail to communicate with the previous auditor, that's also an offense. Clause number 9, non-compliance with the appointment procedure followed for appointing an auditor and Companies Act 2013. Clause 11 is if you are engaging with the profession or a business other than the professional chartered accountancy. These are all the very, very important clauses. I am going to deal with 1 or 2 clauses today for the positive, because little time is given to me. Part 2, Part 3. Part 2 deals with the members in service. Part 3 is general clauses. Part 4 is very important. Part 4 has got 2 clauses. One clause is, punishment for less than 6 months or more than 6 months in a civil court and all. So clause 2 is a member does any act which brings disrepute to the profession, or institute as a result of his action, whether or not related to the profession or otherwise also. There may be any act done otherwise than for profession also will come under this particular clause. As I told you, second schedule, there are 5 important clauses. There are 3 parts, part 1, 2, 3. Part 1 has got 5 important clauses. They are all relating to the attest functions. Like, clause 5, if you fail to disclose any material fact which is known to you, then you are found guilty. Similarly, clause 6, 7, 8, 9, they are all failure to bring to the notice of the stakeholder or the reader the facts that are known to you, which need to be brought to their knowledge, and following of the accounting standards, all standards which are regulated, and also the auditing and assurance standards and attest function. These are all the things which come under second schedule. Friends, just take you through for another 2-3 minutes about how this filing of cases can be done in 2 different routes. One is complaint. An aggrieved party need not be a chartered accountant. Anybody, any citizen, any foreigner also. There are some cases lodged by foreign citizens also against Indian chartered accountants. They can lodge a complaint. There's a format, 2,500 rupees pay, and lodge the complaint. That is not a complaint route. The another thing is information route is there. The information route is one. Suppose the direct discipline. See some news item. They purchase all the news item. There's somebody watching what is going on in the market also. So in the entire country, which is related to the chartered accountant's performance. So suo motu, they can file a case based upon some information available. They can make a preliminary inquiry and some news item comes. Some chartered accountant has done XYZ thing. So still that can be taken. And there are regulators. SEBI, MCA, Reserve Bank of India, Control Auditor General of India, they also file cases in information. They got information they share because they don't want to come against a complaint route where they have to appear before the DC or BOD as the case may be. The departments like CBDT, the GST department and banks, they also file cases against chartered accountants. There are some cases, most of these cases, most of the critical cases are in the complaint route they come, otherwise the information route. Similarly, most important thing is the investigating agencies, they file cases. Central Bureau of Investigation, CBI, and SFIO, Serious Fraud Investigation Office, and Enforcement Directorate, Information Bureau of various state governments, they also file case information route. And our own institute at head office, we've got 3 or 4 sections. One is FRRB, Financial Reporting Review Board, and QRB, Quality Review Board, and TQRB, Tax Audit Quality Review Board. If they find any inconsistencies, divergences they find during the course of that verification of the various financial reports, they also file a case, the information case, before the disciplinary directive. These are the cases. Once you file a case, it can be withdrawn at any point of time. Before the finding is given, the power of withdrawal is there with the complainant. But that's not automatic route. We've got a good system. Your withdrawal is there. Case will go to the respective board or the disciplinary committee, and they'll study the case. Withdrawal may be application is made, a simple application. But if there's a merit in that particular case that the chartered accountant is erred there, the withdrawal need not be permitted. Withdrawal can be rejected and the case can be taken forward. Suppose that particular complainant, he doesn't want to appear before the board or discipline, no problem. That will be treated as converted into from complaint case to information case, and the case will be proceeded like that. Then comes, if the chartered accountant is found guilty, ultimately, who is going to be penalized there? It is the member who was erred there, who is against whom the action will be initiated, not against the firm. There is a firm of 10 chartered accountants, but still, if the one member is a signatory or EQCR, there are so many partners, engagement partner, all those things, the case will be initiated against all those people who are involved in that particular function. but other partners will not be touched. Even the ICAI doesn't have powers to punish the firm. Then comes when you can file. 7 years is the time given. Within 7 years, anytime you can file a case, and that should be accepted by the director of discipline. And if there is some case which is beyond 7 years, there's no bar that you should not take it. The director of discipline can accept that also as a case, and then he can write to the respondent and say, this is the file, this is a case filed against you, which is related to 10 years ago. Would like to proceed. Do you have anything to say? Then he may say, sir, this particular case has been filed 7 years ago. That offense, or the alleged offense, if at all it is there, that was done 7 years ago. I don't have the records to defend my case. I will not be able to defend my case. Hence, you please don't release the case. Okay, if such request is made, case will not be registered because there is a valid reason for the so-called respondent that he doesn't have anything to defend due to paucity of time. Then comes the process. The complaint is lodged. Complaint after due verification, the complaint number is given. Then director of discipline is independent authority. Though appointed by central council, independent authority, he will register the case and he will make a prima facie opinion. It is not a PFO, prima facie opinion. He will make preliminary investigation will be done. The case will be shared with the respondent. Respondent will give the reply. That will be shared with the complainant. He will give a rejoinder. All those formalities will be completed, and he will come with a prima facie opinion whether that particular member is guilty or not guilty. If he is not guilty, all such cases will come before the board of discipline. There's, as I told you, only one board of discipline for the entire country. They will study the matter. They'll see whether this is really not guilty or not. If they find that further investigation should be done, or they find this child is guilty, they can reverse the decision of the director of discipline and take it up for inquiry. Suppose that particular case, the respondent is found guilty, then the case will go to respective board, either board or disciplinary committee, or whichever the bench, it will be referred to them. Thereafter, the procedure, they will go with the inquiry and give opportunity to both the parties to present before the board or the disciplinary committee, and a finding will be given. After the finding is given, one more opportunity will be given. Finding is going to guilty, not guilty, no issue at all. If he is found guilty, then he has to be awarded punishment. One more opportunity will be given to the respondent, the member who was found guilty, to present before the board or the disciplinary committee, and after hearing them, the punishment will be awarded. What is the punishment? The first schedule offenses, the punishment is simple thing. Simplest offense is there, he is reprimanded. He is found guilty, but no penalty, no removal. That's not a reprimand. Second thing is, he can be levied fine up to ₹1 lakh. Third thing is, if his further serious case is there, his name can be removed for a period of up to 3 months. If second schedule, that's serious cases. As I told you, there are very, professional misconduct is more there. If there is a gross negligence is there, such case will be referred there. And there also reprimand is there for a normal case. And fine can be levied up to 5 lakhs of rupees. And removal of the member can happen permanently for life. He can be removed for life also. So these are the things. Now I request Selva, if Selva is there, I want him to make a display some 4 slides I have.
I'll share the screen, sir.
Yeah, the friends, I'll tell you, justice delayed is justice denied. We heard many places. There is some feeling among the members that the long pendency in the cases before the ICAI head office, before disciplinary directorate. And there are cases which have not been pronounced. In 2001, some offense took place, and in the old mechanism, he was found guilty. He was not punished as on date because the matter is pending before High Court with the old mechanism. New mechanism, the punishment is awarded by the disciplinary committee or the board of discipline. So now, next slide. I'll tell you, the long pendency is coming down drastically. In sense, next slide. Yeah. If you see the slide, this is, as I told you, these are the cases which are pending up to prima facie opinion stage. That means still with the director discipline. There are 363 cases in the formation of PFO. ICAI as a whole. Second is, they are not the PFO means they are lodged a complaint. It has not come to the PFO stage also. Second thing is, PFO stage, including referred back cases where the PFOs are made, they are 626. And cases ready for placing, PFO is made, they have to place before the board. There are 308 cases, and cases closed at the PFO stage itself with the concurrence of BO and DC 2,194 cases. Total 3,493 cases. This is the statistics as 34/2021. I'll take next stage and next slide. Now, what are all the cases pending before the earlier slide is before directed discipline. Now, before the Board of Disciplinary Committee, the cases under inquiry are 550 cases. This means one or more hearings have been given, or they are in the process of giving the hearing for the parties. Second, PFOs have been made by the directed discipline to be considered by the respective boards is 274, and already member has been found guilty, but they have to be awarded punishment. They are 215. Cases already concluded up to after hearing is 1,492. This is where we stand as 34/21. Next slide. What is it? You may say, sir, the slow disposal is there. I will tell you, the institute has taken so much of measures to speed up the entire process, disposal. Now the disposal is in 1920 and 2021, so many meetings were held. In spite of Corona, there are PFOs considered, 725 PFOs have been considered in a matter of 2 years in spite of COVID-19. And disposal is 701 cases have been disposed during the last 2 years, and punishment is 250 cases have been awarded punishment. So now the institute is working too fast to see that all these cases are disposed. Next slide. Next slide is only the pictorial form of the cases. This is only pictorial form what I stated. Next slide. Like CA Jalapati has done, now awareness among the members regarding the cases and how the entire disciplinary mechanism works, and how child accounts are getting caught by the disciplinary mechanism. So those things should be awareness programs should be created. Today's program is one such program. Next slide. So there is a perception gap. Wide perception gap is there between a chartered accountant and the disciplinary mechanism. Not disciplinary ethical standard. There's a perception gap is there. Second perception gap is the stakeholders. The stakeholders are the readers of the financial statement. They feel if a chartered accountant signs, that is the end of the story, and he is giving the full certificate that everything is right. That's not there. We are aware. We give a reasonable assurance in some cases, absolute assurance in some cases, and there's an inherent limitation as to audit. These are all the limitations that you have. So the moment some scam happens, something goes on somewhere, immediately next day morning you'll find the chartered accountant's name, auditor's name in the newspaper and in the media, social media, everywhere. They're happy because the gap is there in the understanding what a chartered accountant certifies. Thereby, recently, our head office, our president has initiated a process where we are in touch with all the investigating agencies like the CBI, SFIO, IB, ID, ED, everyone, to say what is the level of assurance we are giving and how far a chartered accountant can be made responsible for this one. So this is what initial thing, friends. Now I take you through one particular information where maximum number of cases are coming before the. These slides can be removed now. Yeah, this presentation goes. Yeah. So now I'll take you to clause 8 of part 1 of schedule 1. First schedule. What is that? Communication with the previous auditor. Friends, as I told you, loyalty of the client with the chartered accountant, it is coming down. Because today's world, they want you to perform. If you don't perform, they don't mind changing the auditor. That may be many reasons. Is the performance, high fees, or you are not compromising with his requirement. He wants a clean report. You want to qualify. There may be a number of reasons, but they change the auditor. This was not the case in earlier years. Those seniors will understand. In the 80s, 90s, 2000, this was not the case. But today, the clients change the auditor as frequently as they want. Under these circumstances, one clause which is very important we should note is the communication with the previous auditor. Though this is a very simple section, number of cases are being filed before the disciplinary board of discipline, and for no smallest mistake committed by the auditor, he is found guilty in almost all the cases, many cases at least. I'll take you through what is this particular thing. First thing is, before appointing as an auditor, you have to communicate with the previous auditor. I have to inform him there's a proposal which I have received from so-and-so client proposing to appoint us as an auditor of that the company or the firm, whatever it is, tax audit or company audit, anything. And the communicator say, do you have any professional reason for me not to accept this particular assignment? Once you send that one, that previous auditor will communicate to us with or without objection. There's nothing, no objection, no objection certificate. He may communicate to us that he has got a concern because of these reasons, professional reasons. You should not take up this particular audit. One communication. Otherwise, he may give a clean report stating that I don't have an objection at all. You may please accept the appointment. Suppose if he says that, no problem at all. Now the issue is, how do you send this particular communication? Auditor, this incoming auditor, he telephones the previous auditor and tells, sir, the so-and-so company has come to me. They want appointment with the auditor. So do you have an objection? He says, no problem, Prasanna Kumar. You take up, not a problem. You are a good friend of mine. So at least you are doing that one. I don't have an issue at all. Prasanna Kumar may think that, oh, this he has done, he has given me oral acceptance. He is such a good friend of mine. Jalapati is a good friend. Nothing is going to happen. So let us proceed. You proceed. Again, I'll take back to the earlier discussion. 7 years time is there. This previous and current auditor, they are friends today. Within 7 years, anytime there's a dispute between these two people, some misunderstanding is there, he'll file a case. The so-and-so time, he accepted an auditor without taking my concurrence, without communicating with me. Then that particular incoming auditor will be found guilty in such cases. Now, to safeguard his own interest, what should be done? You have to communicate with him. There's 2-3 methods which are suggested. One method is you have to communicate with send it by post with acknowledgement due. Thereby, the recipient will sign. You've got a proof of delivering this particular letter. Second thing is, and you can give a hand delivery also, but take acknowledgement for him that he has received this particular letter. Then there is no issue at all. So anything that you can send it by email also, not a problem. Now it is permitted with effect of 1720, it is permitted. Email also, but you should have proof that he has received. You should say, okay, received, or he should acknowledge, okay, yes, whatever it is. Some communication should be there from him to the last known email ID. If that is the case, there will not be any problem, and you've got a proof of getting delivered. Now, second issue is, suppose you deliver it, can you take up the assignment immediately? You've got a proof. Normally, when a relationship is good, you don't insist for that, but acknowledgement is a must. I repeat, acknowledgement is a must. That safeguards your interest, and you're free. You don't have tension even after 7 years also. Now the issue is, the third thing is, before I go to the reasonable time, UDIN also, there's a proposal to make use of UDIN as a channel to see that the communication is sent to the other auditor, because the incoming auditor may not know the email ID of the previous auditor. The incoming auditor may not know the address of the previous auditor, except the name of the firm or whatever it is, which we may be known. They may not know the latest address as on date. Maybe the previous audit report will be there. There you can see from the new client, you can get the address, but would not know. Thereby, wanted to make use of UDIN as a medium for that one. But of course, that's pending now. Council has not approved. So maybe down the line, it may also come up. If it comes, there's a good mechanism of communicating with the previous auditor, because the moment you put it there, it gets delivered there. That may be a conclusive proof. It has not yet been implemented. So the moment you send the communication, can you take up the audit? No, you have to give a reasonable time. What is the reasonable time? It is not prescribed anywhere. You can give the reasonable time. Generally, we feel 1 week time should be given. You send it today, wait for 1 week. If it doesn't communicate within 1 week, you carry on. You need not wait anymore. That is deemed to have been accepted, deemed to be shown that he doesn't have any objection at all. You can go ahead. In the meanwhile, he writes, then the correspondence continues. But suppose he writes, what are the types of objections he can raise? There are 2 things. One is, he may say, you accept the assignment, I don't have issue at all, provided my fees due is paid. He may say the fees is due to him. Item number 1. Second thing is, he may say that I got a professional information I will give you. Thereby, I advise you not to accept. That I'll come little later. First, I will deal with the professional fees due. Fees due will be normally, in many cases, it will be there. Before accepting the assignment, he has to ensure that the fees is paid to them. How do you ensure that one? What is the fees to be paid? The moment the outgoing auditor knows that he is changing the auditor, he may raise the invoice for all the services rendered in the past. Maybe he has rendered some service, some bank loan, that this certificate, that certificate, everything was given maybe 2-3 years down the line, but he has not billed them. He has been billing only the statutory audit, statutory functions only. He has not billed such things. Thereby, so he raised the invoice now. That invoice may be huge number be there. Now, is it the duty of the incoming auditor to ensure the entire fee should be paid, including the one which has been raised now for the services rendered in the past? And what is the fees due? Members, I'll tell you, the fees due is undisputed fees. If there's a dispute between the client and the previous auditor with respect to the fees, then we need not pay. That is not disputed fees. We need not ensure that it need to be done. But however, as a best practice, because the outgoing audit is also a member of our fraternity, we should always put our efforts, that is the ethical standard. You should put your effort to see that a reasonably the particular fees, disputed fees is settled and our member gets his due fees. That has got nothing to do with the disciplinary mechanism. That's the only advisory. Now the fees due is, as far as the disciplinary is concerned, the fees due is the fees that outstanding in the books of account of that particular year for which he was auditor, last auditor. 2021 he was auditor, 31st March, what is the fees outstanding in the books of account? Maybe related to 2021 or earlier years. That is the fees which need to be ensured that is paid to the previous auditor. Normally what happens? The moment he raised the invoice, that for all the past service, a huge big bill is sent, the incoming audit is afraid to accept, because the ethical standards say that I need to ensure the fees is paid, and there is a dispute. What to do now? He will say, I am not interested in this assignment. Why I should take up this assignment? Tomorrow this gentleman will file a case against me, and I should run after the disciplinary committee people. Why I should do it? He will not take it up. Don't do that. If the client is good, you want to accept it. He is due as per the books, he make the payment, keep the acknowledgement, you can accept the assignment. The second thing is, you may say that there may be some other reason. What are the other reasons, professional reasons for which you should not accept? That is, suppose the previous auditor has issued a qualified report. He has issued a qualified report with some qualifications. Then he may say, sir, I've issued a qualified report. You please see that one. Then the incoming auditor should see whether this particular client is changing auditor because the previous auditor has given a qualified report or not. You have to study that matter. You have to go to the client, see they make analysis and see that he may accept in spite of qualified opinion. What are those circumstances? If the incoming auditor, after making a thorough analysis and study, if he feels that there's no merit in the qualification and the previous auditor has not applied his mind properly, which has resulted in the qualification, if he is convinced about that one, still he may ignore that one and accept the audit. And if he feels that the previous auditor has done a right job and the qualified opinion and whatever the qualification made, he may not be in the audit report, maybe in issuing a certificate and any other assignment, if there is a merit, it is the duty of the incoming auditor not to accept that one. He should say, if you are changing the auditor because he has done a good job, you should not take it up. So that's what is this. Now the next thing comes. I told you a reasonable time of 7 days should be given. Now the next thing is, sir, as far as this audit is concerned in private sector, it is the promoter or the owner, whoever it is, whatever the name, they can change the auditor, they can appoint the auditor. Thereby, I have to go to the previous auditor. Then there are certain audit assignments given by the regulatory mechanism in the world, like Reserve Bank of India appoints, some bank appoints, a CNDG appoints. There are regulatory authorities, RBI and the CNDG. If they appoint an auditor for auditing one company or the bank, now what is my responsibility? The regulatory authority, why should I write to the previous auditor? No. Ethical stance are very clear. Even if it is that scenario, you have to write to the previous auditor and take his communication, whatever the objection or no objection should be obtained from him. So does it apply to tax audit? It applies to not only tax audit, it applies to all types of audit, be it a concurrent audit, tax audit, revenue audit, or stock audit, whatever you do, which was done by the previous auditor, and you have to communicate with the previous auditor. There's a big challenging thing for most of the auditors. There may be a situation that a client goes to some auditor, he is not able to complete the assignment within time. There's a due date for everything. There's a due date for Companies Act. There's a due date for a company. For tax audit cases, there's a due date. So TP, there's a due date. When just before the due date, he wants to change the auditor because he's not happy with the auditor or he's not finding time. Maybe some other ulterior motive also may be there. Under those circumstances, what should be done? So because he comes to you, 30th September is the last date for filing the return of income, for issuing a tax audit report, and he comes to you on 27th or 24th or 25th. What do you do? Second thing is, the bank branch audits. Normally, we're supposed they advise us to take up the audit, bank branch audit, by 3rd or 4th of April. The appointment comes somewhere on 31st of March, sometime in the month of April it comes. Now, how do you deal with it? The time will be very short, but I have to communicate to the other auditor, previous auditor, wait for a reasonable time, at least 1 week time, 6-7 days, whatever it is. Then in the meanwhile, this audit need to be completed. The purpose of appointment itself is to comply with the due date. What should be done? You have to communicate with the previous auditor. But when some emergency of type of thing, when the due date is there, some emergency is there to complete the audit, there is a provision that you can accept the appointment provisionally. A provisional acceptance can be given. You can commence the audit also in such circumstances. But acceptance what you give should be provisional. You should give it. I am accepting this appointment in view of the time limit, the timeline that are prescribed for completing this audit. But this is subject to the no objection that will be given by my predecessor auditor. That we can do so that you save time in taking up the audit. Suppose there may be another issue where a client comes on 30th September morning and he wants us to do it. There's no time. You cannot take up that audit. There's no exception for this. Reasonable time of 6 or 7 days, as the case may be, should be taken up. We cannot actually. You have to tell that I will not be able to do the audit because I will not be able to get the no objection from him. Probably you can talk to him. You can talk to the previous auditor, and he agrees. Personally, you can send somebody, or through email you can send to the communication. If he gives no objection, you can take up. Even if he gives no objection, evening 6 o'clock, you have got midnight 12 o'clock. Still, if you are capable of completing the audit, you can accept, but not without a communication from him. So this is one thing which you need to keep in mind. See, there is something known as certificate of posting. Is it permitted? The youngsters may not know what is certificate of posting. Certificate of posting is not permitted, only registrable acknowledgement due. Then I'll take you through the one more clarification. Whether I told you regarding the phones, yeah, yes. I want to conclude this particular matter, this particular class with one example. I'll tell you the matter is so serious. Whenever a case comes before the Board of Discipline, no acknowledgement is not there, still he has taken the audit, he is found guilty. The present system, you can see in the number of cases which have been finalized with the Board of Discipline, this type of cases, if the acknowledgement is not there, they are found guilty. And normally, if you see, make analysis of the reasoned judgments, not that is binding on the Board of Discipline. Board of Discipline can take any decision they want, depending on the facts and circumstances of the case. The reasoned judgment, if you make analysis, you will understand he is found guilty and he is reprimanded straight away. If the fees due is not paid, that he has not ensured that fees due to the previous audit is not paid, he is levied fine also in such cases. These are the minimum punishment that's given. That the trend it has been there last 2-3 years. That's why, friends, the small mistakes, don't take it a lenient view. Ultimately, when you are in trouble, nobody will come to a rescue, and you will be found guilty. You know the value of found guilty. We know as a chartered accountant, we value it the most. Then comes, I'll give one classic example. There are many examples. For paucity of time, I'll give you, which will be eye opener. This is only I'm quoting for the sake of making you understand the seriousness involved in this particular case. Wife and husband, they are chartered accountants. This is a live case. I'm not putting the names region also. Wife and husband were chartered accountants. So husband was an auditor. See, wife was the previous auditor. This example is different. Wife was the auditor of an NGO. NGO had one system of rotation of auditors. Rotation of auditors came in 2000 Act, or Ganesh Balakrishnan king in that subject. So done. But whereas it is NGO, they had this policy much before also. After 5 years, the completion of the wife as auditor, that due to rotation policy, that audit was given to the husband. So husband is supposed to take a no objection certificate. He has to write the previous auditor's wife. He is supposed to write he has to communicate to the previous auditor. He has not communicated because after all, the wife and husband, what will happen? Jolly well, he has accepted. Later on, unfortunate situation, they parted. When they parted, a case was filed by the previous auditor against the incoming auditor that he has not taken, he has not communicated with me when he has taken this particular case. Thereby, of course, that particular case came up for a settlement. Otherwise, that was accepted with BOD also. Otherwise, that particular incoming auditor should have been found guilty. So why I'm telling you this one, you be careful for small things because number of cases are more. Particularly, we used to get these cases in other parts of the country, less number from southern region. Nowadays, it has become big because change of auditors has become a routine thing. So number of cases have gone up like anything. So you have to be very careful in these cases. Friends, the next class which I would like to take up is part 4, class 2. What is this class? This is the class that a member brings disrepute to the profession or the institute as a result of his action, whether or not related to the profession. There may be professional matter, non-professional matter also. What is this about? I'll tell you one case. This is a case where if a member, whether in practice or in service, he was involved in cheating activity and he was not some deceiving activity, he was involved in giving a wrong information, he was involved in giving, he was involved in some activity where that particular person, investor, somebody has believed the statement of chartered accountant, that particular auditor, and he is a willful defaulter, or there's a family dispute between them where he has not acted, where the member has not acted fairly with the other party, or any other matter of that kind. There's no limit at all. If he has brought the disrepute to the profession or the institute, he will be found guilty. I'll tell you one classic case. There's a real estate company. They held a investors meeting. Investment, they do a plotting of land and sell. Every Sunday they have one investors meeting where they take this prospective customers to the land. They show all the plots, everything, and sell. The investor meeting was there. The chartered accountant went there. One the auditor of that particular company or whatever it is, they invited him to come for the investors meet. He went there and he said, this company is a very good company. Well, audit is for this company for so many years and the plotting is very good. So you can purchase, and they registered all the formalities, whatever he knows. He is narrated in that particular meeting on Sunday. Somebody recorded this meeting. Later on, that particular investor, he purchased that particular one particular plot there, and it was not registered, and there was a dispute between the company and that particular investor. Investor filed a case against the chartered accountant stating that particular day you have told me that this company so you're going to good report. I believed you because you're a chartered accountant. If somebody else told, I shouldn't have believed. I believed you and invested my money. Now I have been cheated. The entire investment was based on your statement. Hence, you should be found guilty. He filed a case against this chartered accountant. No doubt, if the evidence is there that he has spoken that way, he'll be taken to task. He'll be punished. He'll be found guilty. So we should be very careful. Like Ganesh also explained, so you have to limit yourself. You don't overact anywhere. During the course he explained, you follow that one. The assignment is given for X, do X. Don't go for X plus 1. It's not your duty at all. Ultimately, we'll be in trouble somewhere down the line. Moreover, institute has got 7 years policy. Anytime anybody can file a case against you. Then comes, I'll give you one more case, and with that, I think my time will be over. I'll close my presentation. There's one auditor. One company wanted to appoint one XYZ company as an auditor company. Before that particular matter is taken before the board and later on to the AGM for appointment of the auditor, they take a consent from the auditor that if I am appointed as an auditor of your company and I fall within the regulation, I am eligible to be appointed. The standard letter is there, they send it. Yes, given. The matter when board of directors said, okay, recommended his name, went to the AGM. AGM said he cannot be appointed. They wanted to go with some other auditor. There's a communication, took nearly 30 days after the AGM is over. There's some investor, board of directors, some issues were there. After 1 month, there's a policy. Again, they followed the due process and appoint another person as a charter, another firm as a charter auditor of that company. In the meanwhile, the charter account raised the invoice What he said, sir, I have given a consent that if appointed, that I'm eligible to appoint XYZ, but you are not appointed. In the meanwhile, I given a consent to you because I am supposed to take X number of cases. I'm already full. 20 cases, 20 companies I can audit. 19 are full. Well, 20th company I given it to you. You are not appointed. Thereby, the 21st company which came for appointing me as auditor, I said no, because I already given a consent to so-and-so company. You're not given. Thereby, I lost an opportunity here. Had you appointed me, I should have been the auditor of your company for 5 years with a remuneration of 2 lakhs of rupees. Because 5 years I lost an opportunity. So 5 lakhs, 2 lakhs into 5 years, 10 lakhs of rupees, you make a compensation. So he raised a claim on the company. Matter came up before the Board of Discipline. Board of Discipline, so much correspondence was there. Forth and back, so much was there. Was studying the entire thing. Finally, the finding was that the auditor was appointed subsequently. The entire appointment was with a due process following all the provisions of the Companies Act. They have done, correctly they have done. But whereas this auditor, they are not appointed for whatever the reason. They never gave a guarantee that they are going to appoint it. They only took the consent. They may or they may not appoint. That is the prerogative of the AGM, the general body. Others don't have power. In these circumstances, that particular auditor who has raised the invoice, he brought disrepute to the profession. You should have kept quiet. Otherwise, they cannot make a false claim of this, and thereby he was found guilty under this particular clause. I'll close with the last example. See a Praful Chatterjee, the president, not immediate past, the past president in the current council, who had a meeting in the Ministry of Corporate Affairs of a disciplinary mechanism. There are some issues were there. All disciplinary committee members, everyone was there, including the government nominees, were having a meeting. He narrated one thing. Sir, our chartered accountant disciplinary mechanism is such a great mechanism, which is scrupulously followed by the institute. If a chartered accountant is going in a car or in a motorbike, a red signal is there on the road, a policeman is standing other side of the signal, and he jumps the signal. When red signal is there, he has crossed that signal. Other side, the policeman caught and said, you have to pay penalty. He has paid rupees 500 rupees penalty, he has paid, took the challan, went off. But if that policeman brings to the knowledge of the institute that the chartered accountant who has done this particular thing, jumping the red signal, will find him guilty because he brought disrepute to the profession by not following the law of the land. That is the great mechanism we have. And everyone appreciates that as an example, not that it's going to happen. It may happen also. I am not telling you, I am not giving any immunity here. This is what has happened. Such a great mechanism we have. The friends, I have a lot of other material also to tell, but I thought, within the limited time given, I just want to give a eye opener to you. Don't take anything casually. Ultimately, what if face the situation? If somebody X is found guilty, he may not feel. He may think like that. He may go and appeal. He may go to an advocate and fight his case. If it happens to a chartered accountant, the character of the chartered accountant is such, the integrity of the chartered accountant is such, he will feel bad. That is the last day he will see, as if I lost my profession is law. He will feel as if he's a criminal. I've been branded as a criminal for a simple non-communication, which is branded as a guilty. That is the type of profession we are. That is the type of the culture that is built in the blood of the chartered accountants. And that scenario, we have to be very careful. And every time you do not that I'm telling, don't do anything. Do a good practice, earn money, great service to society, live happily. Everything should be there. But let us not overact. Let us limit to the purpose for which we have been appointed. With this, I thank Ganesh for introducing the subject very well. It made my presentation easy within limited time. I thank the chairman also for giving an opportunity. Anyway, we've got question answer session. If anything related to Board of Discipline first schedule, I'll be able to certainly satisfy if the questions are there. Thank you very much.
Thank you very much, sir. Questions? Ganesh sir, should I read for you or you can read for you, sir?
It up. Whether a partner who is also a branch owner can start practice in addition to continuation branch in charge of the firm. The question is that whether he can be a partner and a proprietor. That's a very tough question. I will ask our Central Council member, because I've not seen cases where you are a partner as well as your own proprietor, because you can have multiple partnership. There is nothing which the institute does not prohibit you,
Yes.
from continuing it. So
Yeah, there's no right. You are right. There's no prohibition at all.
yeah, so you can continue it, but I would rather encourage you to have more partnerships than proprietorship, because having the conflicts will have a challenge. So I would recommend you to run into that. So one of my clients has moved from me without paying audit for 30 years. The new CA has not asked for my consent. I don't know which CA has taken over my client, how to complain. Absolutely. This is a favorite subject of Mr. Prasanna Kumar, which he explains with so much of passion that please go ahead. You can go, I'll tell you one thing. If it's a company, which is the Companies Act, go to the MCA, download from the MCA. You will know who the auditor has been appointed. And I think absolutely, if there's the audit CA firm has not followed, you may first talk to him. Don't even complain. My recommendation, as Mr. Prasanna Kumar said, this is not a professional enmity that you have, but it is something which he may not be aware. So probably you can have a talk. Still, if it does not work, tell him this is what the process I'm planning to follow. Still, if it does not work, then you can follow the processes laid down in the guidelines. Can a CA having COPVV as statutory order of BOI, even if he holds one single share of Bank of India? So there are limitations in terms of having shares. So I think if it is immaterial, and I don't think so, you should have. But ideally, if you are a firm which believes that independence will be impaired if I'm a shareholder because I'm a recipient of dividend, if I'm a recipient of this, ideally you should not hold any shares, because that will be a restricted entity as far as concerned. But Companies Act do provide you with set limitations of 1 lakh or something, and 10,000 and all of that. But my recommendation is, if you hold it, please do not do that, because it's not about today, because somebody might say you are also a shareholder, while you might go and explain saying that it's not material. Next one, I have a doubt in respect of communication to the previous audit in the following. ABC are the partners. B is a partner in charge of City. After 10 years, B retired from A and started another firm under name Co. And clients, my question whether B has to communicate appointment of A and Co. This is pretty. This thing is now. Question is the firms different? If the firms are different, and if he has retired and the new firm has been appointed, it is no different. So the question is, it is no different unless if it is firms within the same umbrella definition of the network firms. If it is network firms, you don't need it. If it is not network firms, if these partners are different, the firms are different, then you need to necessarily get the communication about the appointment.
Yes, they have to communicate. There's no other issue, because this is coming up in many other cases also. There's a wife and husband of practitioners, and husband was the auditor. It has happened recently in Hyderabad, the live case. Husband unfortunately expired due to COVID, and all those clients have to be shifted. They come to there's a partnership firm, A&Co. Wife wanted to join that firm. All these clients, they wanted to come to the wife, because husband was, he was the in charge partner looking over all these affairs. But she had so much of difficulty in getting a no objection from the partnership firm, which has become a proprietor after the demise of that particular husband. These are the problems. You have to communicate. There's no other go here.
Right. Next question: if an Indian CA practices or employed abroad, is it necessary to report to ICAI? I suppose yes, because there's a communication which goes through it. Where is your location, professional address, and all of this. And if it is so, you have to do. And if you're saying you're practicing as an Indian chartered accountant, absolutely. If you're in service, even then, because when you have this membership and all that, there is this communication which has to go through. If you're a professional accountant, I would encourage you, please keep the ICAI Institute or the chapter which is there, which is running. So respective chapters, if they're in the foreign countries, you can have that, because they will have that list. Many of the CA practice add in their qualification forensic auditor. The code does not allow this. Is this correct? Absolutely. Forensic auditor is generally not a terminology which is not allowed, please. And this is, but you're right, because excitement always precedes auditors, because everybody passes forensic, they put it. The point, everybody passes IBBCC, they put it, but you cannot guarantee them whether they will get any assignments or not, but they can put it, because that is not allowed. So therefore prohibited, restricted from that. Next. Can you just go down, scroll down, Mr. Pranay? Entire tutoring are forms family members. There are small companies here. Chartered is required to render such like opting GST filing, also set on the companies. also assist in IT, also tax audit scrutiny, all together CFM provided under one roof for such company. Absolutely, this is exactly where my question back to the Central Council members and the institute, that you have to distinguish between tier 2, tier 3 cities, because it is not possible to comply to all what is there. Even before your question, I've already put my question to the Central Council, but they have to, because as much as large entities are there, you have small entities. As much as large accounting standards are there, there are small accounting standards. As much as the large companies are there, you've got small, medium enterprises. So you should not be in measuring everybody the same breath. You have to give that concession. But one thing which is very important, do not do the management role. If you are the management role and you are saying that I'm the person who does everything and I sign it, it cannot. It's a self-defeating purpose. Please do not play management role, even if you're from a tier 2. You have somebody else, because end of the day, you are issuing an opinion on a report. An opinion is something which is prepared other than by you. So therefore, I would recommend you not to get into that part of a management role. But filing returns and all of this is fine, but you need to bear in mind. But anyway, our friend Mr. Prasanna Kumar is there. He will take care about it. How does SQC1 need to be revised for these ethic changes? As I said, both SQC1 and Code of Ethics work parallelly and work together. SQC is applicable on the member, on the firm and its members, whereas ethics is applicable to all professional accountants. That is the distinction you need to make. So SQC, if you issue an audit opinion on financial statements, whether it's an audit or a review or an assurance agreement, that is applicable to those firms. Okay, so let's say if I'm a chartered accountant in practice, but I don't do audits, but I do other practices, ethics will be applicable. So the Code of Ethics works for professional accountants, whereas SQC applies to those firms which carry out audit. So both are different and they both work consistently. If one of the partners signs tax audit for the proprietor while filing with them, can another partner of the same firm the physical copy of the report? You can do it, provided you have to give the reasons why he's not able to do it. For example, that is given due to COVID, due to any other reason. Otherwise, they cannot be two signatures on the same thing, unless there is a disability or something which is beyond the control of the person, which again should have been authorized by the person to sign on my behalf. Otherwise, ideally, no, you cannot sign on any other thing. Because if you're saying a proprietor and then another partner, just doesn't go through it. Proprietor is a proprietor, partner is a partner. So your answer is another chartered accountant. It is the answer is no. Sir, can you elaborate 15% fees from one company? So something like this. Suppose you got a fees of, let's say, 20 lakhs. So you are a chartered accountant who is in practice who is earning per annum 20 lakhs. It consists of about 5 clients. But one client gives you about, in a year, about 6 lakhs or 7 lakhs. Okay. So if you say 7 lakhs on 20, so let's say take an hypothetical on I would say 10 lakhs. You take just for a purpose of example, 10 on 20, one client give me 10. So it is more than 15%, the answer is yes. Or more than 3 lakhs, the answer is yes. Then that is where you have, because one client will be intimidating you. That means you will say, you have to do my work. Others are not giving you money, I am giving you money. So therefore, there is a tendency of you to listen to him whatever he says. So that is the reason why the 15% comes with it. Engagement partner, and is this applicable irrespective of the science and the nature of company? This is applicable for listed entities, commanded public interest entities. All public interest entities, this is applicable. It will be. That means I've defined what is it, listed company, insurance, bank, and all of that. Next, most small audit firms file their tax and issue certificate and ROC filing also appear for faceless, and the statutory audit forms a major part of the fees charge. What is their need to give up what is that we need to give up under the Code of Ethics? So as I said, if you are doing audit, now at this point in time, taxation services are not excluded. So therefore, going forward, it might be excluded, but today it is not excluded. So whatever is there, you can follow it, but just make sure that you do not play a role of a management. What is a management? I prepare tax, I compute tax, return on tax on return in tax on total income, right? So if I'm computing the tax, that is what I cannot do. I can file return, but I cannot compute tax what should be accounted in the books. That is what is not allowed. So look at those aspects of it. Always make sure that it is not a management. Filing a form is not in the management role. It's not, does not impact. Management is where you prepare, draw books of accounts, maintain books of accounts. That is what it is. I was a tax auditor for proprietor for last 6 years. For the last year, he has not come to me, and there is no communication. I was unable to reach. Absolutely, tax audit quality review board is a beautiful concept. All these issues will come up there. No auditor, including tax auditor, has to respond to it. If you have a challenge, go PAN number, go look at it from the tax audit's website. You will get all of this information. Absolutely not a problem if anybody has signed it. So therefore, it is. But if the earlier auditor has not done, just make sure you get that communication. If it is not done, then our Prasanna Kumar sir is there. He will help you out. Sir, what about acceptance of fees in form of stake of these startups? You can do it, because as long as you're not auditor, you can always have a fee, a percentage fee that you can do it. The only thing is it should not fall under the review assurance engagement mechanism. That is what you need to make sure. If I'm giving an opinion, that is where I cannot have percentages and all that. Other than that, you can have. Can we hold shares in the bank which are statutory? Is there a minimum limit? It goes, please go and look at the Companies Act. Is also a declaration that you give to the bank that you are not a shareholder. If you are a shareholder, you have to disclose what is the amount of shareholding that you have. And if it conflicts, you cannot be the statutory auditor of that bank. So you look at all of this as part. In case of rotation of, can the outgoing be the tax or internal auditor for the next few years? Tax auditors, he can be. Tax auditor statutory. It's the Companies Act only prohibits, only talks about rotation. Tax auditor does not talk about rotation. Tax audit only talks about limitations of the number of tax audits. So therefore, he can be there for any number of years. That is how it happens. Life goes on. What is the position of proprietor firm? Because EP and KP will be the same. Absolutely, this is exactly where in fact, I used to fight in QRB also the same case. I said, where can you have an EQCR if you're signing a listed company? I have only a proprietor one. So this is something you have to have something segregation. Please compile all of these and please share it with Mr. Prasanna Kumar. He will take it up as a part of the discussions in the review, because you have to treat small firms separately, proprietary firms separately from large, small, medium enterprises, and that's how it should be. Next, so Bank of Baroda is offering credit card to practicing profession, including CAs. The limit of credit card is 1 lakh. Is in the branch or bank, whether practicing firm eligible to accepting? Absolutely, that this issue of credit card is a conflict of interest, because you do not know at what point in time you're owing, whether it is a rolling amount. Ideally, if you've got a credit card, give the credit card, or don't take a credit card, just take another bank and do it, and that will save you even up to camps.
Yeah, actually, as per the Companies Act, the limit is 5 lakhs of rupees loan, but as per the ethical standard is 1 lakh. Up to 1 lakh you can.
No, so that is what I'm trying to say. So don't get into any of this aspect of it. Ideally, if you've got a bank, don't use that for that period when you are this one saying that ledu much fair. Next, sole proprietorship and pooling portfolio, how to comply with it? This is exactly where we have to bring it about, and this is a challenge. Please put it across to the institute. They have to deal, ethics committee, ethics standards board. Please, they will have to deal with it. Can we provide arbitration? Nothing prohibits you from providing arbitration services. But the only point which is there that you should have the qualifications, plus you should make sure that it does not conflict the auditing. You should not be having an audit and then provide arbitration. That is not allowed. A chartered accountant allowed to display the cost account qualification on his visit card as it will lead to a professional. No, cost account is ACA, SIW, MCOM, MBA, LLB. You can put any number you can. There is nothing which prohibits the letters, but you can't say chartered accountant, cost accountant, company secretary. That is what is not allowed, but you can put your initials because that is allowed. That's mutually between all three institutes. See, outside you might fight, inside you're all friends. Can a member in practice be a part of the business? And what approval is required? Now, this is a very tricky question. Again, there are conditions that he should not have substantial interest. It is only that because it's a family business running, but he should not be involved in a day-to-day, because again, if you're in a practice, your certification of practice is something which clearly defines that you are a full-time, you are not a part-time, and that is what brings in the ethical issues. So that please look at that. Whether he in practice also insolvents join LLP, do practice with other professionals. Absolutely, this is something which is allowed by the institute. If you have any doubts, just reach out to these board. We have council members. They are just looking at each of this on a merit basis and then close it out. So There are allowed, because there are also to use multidisciplinary functions is planning to be heard. But again, this is a mutual thing which should be agreed by all three institutes, which is always a painstaking, because CA is the king and rest is that all of that. That's how it thinks. But it, because of the member size, money, everything. Next, as practicing saying, can we visit faculty college with maximum? Absolutely. That is what the institute says with the permission of the council. So, but again, you need to define this. It should not hinder during your office hours. You need to make sure that if you have got an office hours which is defined, be within that outside of that office hours, so that it does not hamper, because there will be staff who will be working with you as an article assistant. So you have to make sure that these are all taken care of.
But the
What about you?
Ganesh here is automatically, you did not take any permission. This is automatic.
Maximum of 25. No, 25 hours is maximum, but see, 25 hours, 26 hours, 27. So it's better to tell the institute I've done. So tomorrow there is a record saying that I've written to the institute and this is what. What about YouTube? Practice is allowed and earning money through advertising. Sometimes it will measure earning. Absolutely, this is a very sensitive issue. Mr. Prasanna Kumar can advise on this, because today social media is such beautiful that you can become a blog, everything you can do it. And if you're handsome like Mr. Prasanna Kumar, you can still put it up, have a serial that 60 weds 40. So you can have all of that series like 30 weds 21. So thank you very much. And I think I hope this was useful. Thank you, sir. Mr. Prasanna Kumar, I think you are as smiling, as energetic, as young as you look, always look. And over to you, Mr. Jalapati and
Shall we close, sir? Chairman, sir?
Yes, sir. Yes, sir. You can. Yeah.
Thank you very much, Ganesh, sir, for giving a perfect package of all the things in a short time of 1.5 hours, 140. It's not at all easy. Most of the speakers I have seen, they have taken 3 hours, but you have stressed on the important aspects of it, and also given used your vast experience in the field. And as you rightly pointed out at the beginning itself, ethics are not to be taught; it should be inculcated. That's the great message that you have given. Thank you very much for your time and efforts on behalf of SIRC, sir. As usual, Prasanna Kumar, sir, very energetic, and I think you found a shortage of time. Anyway, so many queries will be coming to you, but you will be answering these things. If you can have a such program at the ICAI level, sir, to clarify the doubts across the country, so that how the disciplinary mechanism is happening, and alert the members. As you rightly said, there are lots of things to be expected from the members, and the new ethics and the new standards on auditing, accounting standards, all I think we are not very happy with the level of compliance seeing from the feedback. So please create awareness like this. Thank you very much for your time and efforts on behalf of SIRC. Thank you, Chairman. Thank you, SIRC office, back office, and also Selva. Thank you all the delegates for the big numbers in which you have participated. You are the real inspiration for us. Carry on with the fun programs. Thank you very much.
Thank you,
Thank you, sir.
Thank you.
Thank you so much.
Thank you, Jalapati. Thank you, Panaraj. Thanks to all the delegates who have been throughout the program. They are there. Even though there are 1,600 members, it's a very good number. So it was very interesting. Thank you for being
This is like conference, sir. Ethics, new ethics conference.
See, generally ethical standards, nobody likes it, because this is something, a punishing thing, you know. It's not a positive thing. It doesn't contribute to your profession. You are only threatening them, but still people care. That's good.
Yes,
Another important thing Ganesh sir pointed out is, even if you read number of times, you have to go through it personally. You have to read it for not enough if you just watch these presentations. They have to read for.
Correct. That's a good idea. Now, moreover, his presentation was also good. If you can circulate that to all the members, it will be very useful. His presentation was very nice.
We upload it, sir.
Upload, you know, very good. That's a very nice thing about that. Ganesh has done a good job. Of course, he does it. It's not something new for him. He doesn't get time nowadays. He has number one in he's popular on Deloitte, Ganesh. People don't know who is Ganesh. They know him Deloitte, Ganesh.
Tomorrow I'm doing ERC on accounting.
Oh, is it? Good.
Yeah. I did Guwahati 2.5 hours on Saturday.
Oh, great. Vice President's place.
So, it's
Selva, it's
beautiful.
going live.
Absolutely.
Selva?
Can we stop now, sir?
Yeah, you can stop.
Yeah, yeah.
It's going live.
Oh, it's live. Huh? Okay. No
Yes,
problem. We didn't speak anything
Okay.
otherwise.
Yes. Thank you.
So I'm doing
Thank
more
you.
accounting standard non-compliance, this part of it.
Oh,